explain what is there in modern business environment. Let's first broadly discuss the chapter. Now, what you are going to learn in modern business environment is, first you learn about that there is a transition in the market. Earlier it was called as a seller's market, now it has become a buyer's market. Because of what reasons and what is the impact of that? See, when it becomes a buyer's market, efficiency becomes very critical. A business organization cannot start exploiting or cannot continue exploiting the customer. If you are a monopoly, you will start exploiting the customer. Now, because of the intense competition and availability of information, knowledge with the customer, they are well aware of different products, different competitors, different places from where the product can be bought. So, the transition has happened. Because of this, it is increasingly important for an organization to become more and more efficient. To improve the efficiency of an organization, in this chapter you are going to learn about few techniques. The first technique you will learn is total quality management, which focuses on ensuring that the product which a company manufactures is of the superior quality. Quality focus would be there as far as TQM is concerned, which are something called as cost of quality, 4 types of quality, cost, optimum quality, multiple sub segments would be there in the total quality management. The second segment which you are going to learn about is something called as business excellence model. What is business excellence model is, these are basically approaches which will ensure that all my stakeholders requirements are met and an organization implements a system or an information system or a management system which improves their way of working and ensures that the stakeholders needs are met. We will also learn about something called as supply chain management. What is supply chain management is basically the different entities who are involved in the value chain or in the supply chain by which the product ultimately reaches the end customer. The supply chain will comprise of multiple sub-segments, like there is a supplier, then there is a company which manufactures the product, then there is a whole distributor, then there is a wholesaler, then there is a retailer, and finally the customer gets the product. Under the supply chain management, you will have different concepts which we will have to cover. After that, we will also cover an area called as theory of constraints. What is this theory of constraints? We will see later, but it is an extension of marginal costing, and I think we will end the chapter with an area called as gain sharing arrangement and outsourcing. Gain sharing arrangement I had touched upon in one of the problem in decision making, where I said that I will cover this little bit in detail when I go to modern business environment chapter 2 or 3. And outsourcing, which is your make or buy decision, you will discuss more from a qualitative factors point of view. We would have discussed earlier also the qualitative factors, but again the qualitative factors discussion will happen here. So, let us first initially start with this transition which has happened. See, the market which used to be a buyer's market, seller's market, has transitioned into a buyer's market. Because of this transition, it is increasingly important for an organization to become efficient. Now, reason for this becoming a buyer's market is more because of the, I think a lot of it is because of the development of e-commerce, development of internet, global competition. See, to give an example, I think 15 years back I got my first mobile phone. When I purchased my first mobile phone, I did not do any Google check. I did not check with my friends also. I went to a store, got the phone whichever the store owner wanted me to buy. He said that this is the best available model, you please buy that. I ended up buying that. I did not have a way to check customer reviews. I did not have a way to check the pricing of the product at multiple places. I did not want to go to multiple stores. If I want, I can go to multiple stores, check the pricing, but I didn't want to go to multiple places. So, wherever I went, whatever pricing they said, I asked for some reduction and got the product. Today, the same thing, if I want to buy a mobile phone, I first check in 3-4 e-commerce website. I check for reviews. I check for the reviews in the e-commerce website. I understand. So, if assume a company wants to exploit the customer and they are not giving a very good quality product, before buying I will check the reviews. And the reviews will tell that this product is not working well. There is not only a customer review, there are reviews which are being done by influencers. There are reviews where some business channel would put a review, some tech tech channel would put a reviews. So reviews are coming from multiple places, so it's not so simple for a shop owner to influence my decision. So if earlier what used to happen is, I go to a shop, he will easily influence the decision. He will say, please buy this mobile phone, this is the available best model. He will also influence the price at which I need to buy. But today, if I have to buy a mobile phone or a laptop or any product, there are a lot of options available. I do lot of checks, and the most important reason for this is, there is a global competition which has come. There is an information sharing which is available, easily available information. Today it's very easy to get information about any product. Rarely you will see a product having a monopoly kind of a characteristic now, because there is too much of information available. Either you buy it in India or you buy it outside India. Within India also you can buy it from multiple location. So because of this, somewhere the customers are influencing the terms, the pricing. It is not so easy for a business organization or a company to increase pricing, because if you increase pricing, customers may make a move from one place to the another place. Even your CA education industry, earlier I think when I went for classes, I just check with my friends, I go for classes, that's all. There was no online classes, there was no videos available. Now you end up checking videos of the faculty, you speak to friends, understand from there, and then finally decide where do you want to go for classes. This may not be that much of a classic example for that much pressure, because here still a differentiation play a part, but lot of industries the differentiation do not play a big part. So it is easy for the customers to influence the term. But business environment has changed drastically and transitioned from a seller's market to a buyer's market, and because of this you need exceptional performance of the processes. It's not so simple that even whatever, maybe if you are buying a small product, maybe worth less than 100, less than 500, maybe you don't do all that. Even for buying a garment, buying a shirt, t-shirt, there are a lot of options available in the online place. It's not that people just go to a retail store and end up buying. So different people have different expectation. A part of the market has moved into, even your restaurant industry, a part of the market has moved into an online mode. Globalization, mostly it is because of this globalization, availability of data, availability of information, availability of technology, intense competition, all of this has led to this transition. Globalization, intense competition, global excess capacity and production and transportation, global travel and transportation, timely availability of material and service, accessibility and availability of data and knowledge. Earlier I did not have information itself, I was struggling with the availability of information, availability of knowledge as to where the product is available. So earlier when I did not know where the products available, I used to go to the nearest retail store, whatever price he says I used to buy at that price, because I did not have a choice. Now multiple options are available. These multiple options are unnecessarily impacting the profitability of the businessman. So because of this you will have to be efficient. It's not that you can't make money, you can make money as long as you are efficient. You are inefficient and you still want to make money, that is not possible. Inefficiency will not be rewarded now. Earlier the equation was like something like this: cost plus profit is equal to selling price. An organization was calculating the cost, adding the profit margin on top of it, and deciding the selling price. If you are inefficient, cost goes up, selling price go up, and in fact profit also indirectly go up. If the profit is a percentage, if you produce at 100 rupees, your profit is 25. If you produce at 200 rupees, you will make a profit of 50 rupees, because you will make 25% of cost. So if you are inefficient, you may even end up making more money. But now the equation broadly remains the same: selling price minus profit is equal to cost. Selling price is determined by the market. It's not your job to determine the selling price. Mostly the selling price is determined by the market. You determine how much profit you want to make, and the gap is called target cost. You will learn this in chapter 3, an area called as target costing. So Organizations now don't have that much control on deciding the price of a product. Pricing is almost influenced by the market condition or the industry condition. You can decide how much profit you want to make, and then you have a target cost, you have an actual cost, see whether there is a cost reduction required, all that you can end up doing. In this, the first segment I said is I will move to an area called as total quality management. In that, the subsegments are, you have something called as cost of quality, you have something called as 6 C's of TQM, advantages and disadvantages of TQM, prevention, appraisal and failure model. So, the multiple subsegments are there. First, I will focus on cost of quality. Just give me a minute. Okay, many businesses focuses on having a good quality product. In order to have a good quality product or the issues with quality, there are two types of cost an organization will incur. They are called as good quality cost and bad quality cost. If you have a bad quality, there are certain expenses an organization has to incur, and if you want a good quality also, you will have to incur certain expenses. Assume I have a bad quality, what are the problems an organization will face? If you have a bad quality, what are the issues an organization will face? Sorry? Okay, penalties. Okay, what else? Low demand. What else? Both are right points. What else? Product wastage. Okay. What else? Okay, extra expenses. So there is a cost attached with the bad quality, penalties, low demand, product wastage, extra expenses, loss of goodwill, loss of brand strength, all those are issues. Some scrap can be there. So bad quality is called as cost of non-conformance. What is this? Is the technical name. Okay, what is non-conformance? Is your product is not meeting the quality standard. Product is not meeting the quality standard. If it does not meet the quality standard, you will incur something called as cost of non-conformance. These are broadly of two types: internal failure, external failure. Both are issues. External failure is a bigger issue. What is internal failure is, you get to know that there is some problem with the product within the company. Within the company itself, you got to know. For example, Maruti manufactures cars. Now, before the car was dispatched to the end customer, before that itself, they got to know that there is some issue with the product. If you get to know some issue with the product, you may have to scrap it, you may have to rework on that, you may have to do reprocessing, you may have to. So whenever costs are incurred within the company or the defect is known only to the company, they are called as internal failure. Cost incurred because of a bad quality product and the product does not reach the end customer, or the customer is not aware of this. Within the company itself, you end up incurring whatever you want to do. Second is external failure. In the automobile industry, sometimes organizations will say we are recalling the cars. We are recalling the cars. You will keep hearing this news every month. Some or the other company would make a recall of the cars. When the recall happens, the reason for the recall is some issues there with the lot of production. You will do a recall. Recall is an external failure. Recall is an external failure when the customer gets to know about the defect. If the customer is aware of the defect, then it's an external failure. External failure will have an impact on my goodwill. Internal failure does not have an impact on goodwill because you do something and ensure that it does not reach the end customer. So there's an impact on goodwill, loss of market share, loss of existing customers. You will have to do a discount on the defective sale, or you will have to sell it as a downgraded product. So all those are your external failure costs. Warranty repairs, all those are external failure costs. So one is if your product does not meet the quality standard. does not meet the quality standard, there are two types of costs to be incurred. One is your internal failure and second is external failure. Both are issues. External failure is a bigger issue as compared to internal failure. Okay, then what is good quality? Good quality is called as cost of conformance. What is conformance? Is conforming the product to the specifications which have been given. If you are able to produce a good quality product, otherwise called as cost of conformance. This is broadly split into prevention, appraisal. What is prevention cost? Is those costs which are incurred to ensure that I do not produce a bad quality product. I do not produce a bad quality product are called as prevention. Example, training to employees. I provide training to employees so that they are able to ensure that I am able to ensure that they are producing a good quality product, or good machinery, usage of good machinery, preventive maintenance. I keep doing, I ensure that my machinery is maintained in good working condition. If your machinery is in good working condition, you will produce a good quality product, else there are going to be challenges which the company will face. Appraisal cost, see, the role of a prevention cost is to ensure that you do not produce a bad quality product. Appraisal cost wants to ensure that whether there is a bad quality product, and if so, it should not reach the end customer. If so, it should not reach the end customer. Appraisal cost basically checks all types of inspection. It is going to check whether you have produced a bad quality product or not. If you have produced it, please ensure that it reaches only an internal failure and not an external failure. So prevention will cut down both. Okay, prevention will reduce your internal failure as well as your external failure. Appraisal will cut down your external failure, indirectly convert an external failure into an internal failure. It will convert an external failure into an internal failure. Should an organization focus on 100% quality? Should an organization always focus on 100% quality? Is it okay? What is the price an organization will pay if there is 100% quality? Is there a price an organization needs to pay if there is 100% quality? Is there a price or is there a cost to be incurred for 100% quality? Okay, there are certain industries where I do not focus on 100% quality. Example, the book which I have given you, if you read through the book, you will find some mistakes here and there. Every page may not have a mistake, but some typing mistake would be there here and there. If I want to ensure zero mistake, I should keep reading the book multiple times. I'll have to give to 100 people. After that also there is a possibility of a defect. There is a possibility of a mistake still being there, even if I tell 100 people to check. And if I give it to 100 people, I incur significant cost. If I incur significant cost, I will have to recover that cost from you. So there is always an optimum quality. There is always an optimum quality. An optimum quality is one where the total of cost of conformance and cost of non-conformance is the lowest. Cost of conformance and cost of non-conformance put together is the lowest. Both of them have an inverse relationship. If you spend more on prevention and appraisal, internal and external failure will come down. So if you keep increasing cost of conformance, cost of non-conformance will keep coming down. It may reach a zero also at some stage, but when it reaches zero, here you would have ended up spending 10 crores, and that may not be the optimum amount. That may not be the, but there are certain industries where you cannot compromise. Example, pharma. So I am not saying that pharma industry you can allow even a 0.1% defect. So some industry, for example, in my classes, I know books will have few mistakes here and there. Students update me, I correct it in the next edition, but in the next edition something else comes as a mistake. So mistakes will be there. Here and there you will find some typing mistakes being there. I cannot help it. If I try for perfect quality, I will not be able to release the book itself. And the next book, when I try to release the book, by that time changes would have happened. Again I will have to keep working on it. So quality is essential. We are not saying no to it. TQM basically says you need to move towards zero quality or zero defect. move towards zero defect. But cost of quality as a concept says there is something called as optimal quality for a company. Quality, conformance to specification, ability to satisfy customer expectation or value for money. COQ is equal to cost of conformance, cost of non-conformance. Cost of conformance is good quality, non-conformance is bad quality, prevention and appraisal cost, internal failure and external failure cost. In that, prevention cost, cost incurred for preventing poor quality products or services. These are incurred before the actual operation. Some of the example: quality planning, quality assurance, supplier evaluation, new product review, error proofing, capability evaluation. All of this would mostly be done before the production even starts. Before the production starts. So you will do all of this. The objective of doing this is to ensure that you do not get a bad quality product in the manufacturing. Appraisal cost, these are costs incurred to ensure whether the product is meeting the quality standard, whether the product is meeting the quality standard. Broadly, all types of inspection, verification, quality audit, supplier rating, testing, purchase goods and services, in process and final inspection, field testing, audits, calibration of equipment, basically all types of checks. There is one place where there is lack of consistency, that is testing of purchased goods and services. Testing of purchased goods and services. Testing of in process and final inspection is basically done to ensure, to check whether the product is of the adequate quality. When I buy a product and I test that, the purpose of testing is to ensure that I do not produce a bad quality product. Why I inspect a purchased raw material is I don't want a bad quality product. So few places this has been taken as prevention cost. To me, logical, it is prevention cost, but ICI in their definition have said testing of purchased goods and service. So there are three types of inspection. One is purchase of raw material, purchase of WIP, purchase of FG. FG is an appraisal cost, I don't have a problem. WIP is also an appraisal cost, I don't have a problem, because we are checking whether the product is of the adequate quality or not. But testing of raw material alone, I felt it to be a prevention cost. One logic could be that I do not want any wastage, and for me wastage is even raw material. If I am inspecting and in inspection if I get a bad quality raw material, I will have to then discard that product. So that is a cost which I will incur, and that is a wastage I don't want to incur. That logic can put it under appraisal cost. Another logic is you are testing the raw material so that your finished product is not of a bad quality. In that case you can argue it for your prevention cost. Any doubts on this? Any doubts on prevention and appraisal cost? Any item you want me to explain, I can explain. There are few examples there. Any doubts? And a few places, for example, there is something called as maintenance. There can be two types of maintenance, okay? Preventive maintenance, breakdown maintenance. Preventive maintenance will come under prevention cost. Breakdown maintenance will come under internal failure. So an expense can change, the nature of an expense can change based on additional information. So sometimes I may need extra information to do a proper classification. Initially I may proceed with the classification, but sometimes I may write a note also. Then we have internal failure and external failure. Simple internal failure means my product does not reach the end customer. Example: waste, scrap, rework, rectification, failure analysis, delays, redesigning, shortage, retesting, downtime. All this which are incurred and the product does not reach the end customer. Sometimes what will happen is you did an inspection, you found out a defective product, and what you decided is you will sell this defective product as a second hand product or as a downgraded product. If you are doing that, that is an external failure. As if your customer gets to know that there is a problem, that is a external failure. Cost incurred to rectify the defects discovered by the customer. Repairs and servicing. warranty claim, complaints, returns, losses due to sales reduction, you are going to lose market share. You are going to lose market share. Any doubts on this? Let's do few. Okay, we have done a discussion till this, that is the 4 categories of cost: your internal failure, external failure, prevention, appraisal. This is what I was talking about, something called as an optimal COQ. I've already talked about. What is optimal COQs? Basically the level at which the total of prevention, appraisal, internal and external is the lowest. Now, what happens is, an organization, let's assume, is increasing its expenditure on the prevention and appraisal. They are gradually increasing the expenditure on your conformance cost. What will happen is your non-conformance cost will, this is a straight line I put, it will not be a straight line, but it will gradually keep coming down. I have put a straight line. Logically straight line will not work. Both put together, 2 costs put together is somewhere here, and that will show a graph like this. It will keep coming down and then it will start moving up. The combined cost will start coming down initially. It will start coming down. After some point it will start going up. Our objective is to balance internal failure and external failure. We'll have to, conformance and non-conformance. We'll have to balance both. So, if somebody wants 0% defect, then this is the cost you have to incur, which could be even the highest level of cost. But if you are okay with some defect, then this is the optimal point. So, in some industry 1% defective is fine, in some industry 0.5% defective is fine, in some industry 2% defective is fine, in some industry even 10% defective is fine, and in some industry you need a 0% defect. But you need to agree that there are going to be some defects in the process. If you are not accepting to that defects will be there, then there is going to be problem for the company, because you cannot keep spending more and more. There is an inverse relationship between conformance and non-conformance cost. Increased expenditure on conformance will lead to reduction in non-conformance cost. Optimal COQ is one where the combined cost is at minimum. It is not necessary to have a 0 defect, as the combined cost may not be minimum, as the combined cost is not going to be minimum. TQM as a principle focuses on 0 defect. TQM, in that the segment is cost of quality. The optimal COQ says it's not necessary to have 0 defect, but TQM as a principle wants 0 defect. Then we have a model called as PAF model, prevention, appraisal and failure model. Basic thing is, one, it establishes the relationship between your conformance and non-conformance cost, and second thing is it tries to find out that what are the reasons for the problems in the company and how can you rectify them. How will you rectify? By spending more on prevention and appraisal. What are the defects or what are the issues in the company? We did a case study where the issue was downtime. You can tackle the downtime issue by implementing TPM, total productive maintenance, which will include some prevention and appraisal costs. It will include some prevention and appraisal costs. Similarly, the other issues were with the quality. So you said you will implement TQM. You will implement TQM. So whatever the issues are there, gather data on number of failures, apply some assumptions to data and quantify them, chart the data based on 4 elements, allocate resources to combat weak spots, allocate resources to combat your weak spots, understand where the issues are there and try to tackle those issues. If you can tackle those issues, automatically the cost will come down, your failure cost will come down, but that would mean extra cost being incurred on prevention and appraisal. TQM as a concept, it is broadly what we have seen earlier. TQM basically says that everyone in the organization, all employees in the organization should focus on having a better quality product. Everyone in the organization should focus on good quality product. That is, all employees including the top management, all employees including the top management Focus is always on the customer side. You want the customer to be happy. You want to exceed the expectation of the customer. Integrate all organizational functions to focus on meeting customer needs. Focus is on ensuring that the customer needs are met. Sometimes even you exceed the customer expectation. All organizational function is starting from sales, procurement, manufacturing, dispatch, everything should focus on the main focus area is the customer. Here whatever the customer needs are there, you try to meet them. Improve quality of output through continual improvement of internal practices. What is continual improvement? Is Kaizen costing. There should be a continuous improvement in the organization. I want to remove waste, improve efficiency. There are different types of waste which you will learn in the next chapter. Different types of waste could be scrap, rework, maintaining more inventory, doing over processing, maintaining more raw material inventory. So all of that would come under the category of waste. Objective is to eliminate waste to the extent possible. Why does an organization follow this TQM? Is with TQM you will be able to provide superior quality. Moment you provide superior quality, you will be able to exceed your customer expectation. Somewhere there is a possibility of exceeding the customer expectation, and when you are able to exceed the customer expectation, you will have that competitive advantage in the market, because there is a need for competitive advantage for every company, and that competitive advantage can come if you are able to take care of your customers. Product or services should meet or exceed customer expectation. They should be able to meet or exceed customer expectation. Here quality is not the focus area of only the person who is doing manufacturing, not the focus area of only who is doing inspection, or not the person who is doing procurement, or it's not only the top management, it's everyone in the organization. It should get embedded in the culture of the organization. Somewhere the culture of the organization should be such that they need to ensure the product is of the right quality, and there should be a continuous focus on improving that. Total employee involvement. I want total employee involvement. Everyone in the organization should focus on ensuring a better quality product or a service. TQM as a principle is more applicable for manufacturing companies, not that much applicable for service companies. You will understand why later on. So focus on principles such as total employee involvement, continuous improvement, customer focus. I think this concept, the TQM as a concept, has extensive focus on the customer side. Whatever performance measurement I am doing in an organization, that should be from a customer perspective. For example, if Balridge Institute wants to track my performance, they can track it in multiple ways. First area, they can say, let's track, they gave me a revenue target, whether I am able to meet that revenue target or not. That's one way of measuring my performance. But TQM wouldn't want an organization to measure performance like this, because if you are measuring performance on whether I am able to meet the target revenues, whether I am able to meet the target revenues or not, that may not be the right way of measuring performance. They can measure my performance by getting a customer satisfaction score. So whatever performance measurement happens, most of the KPIs, the key performance indicator, would be from a customer point of view. Number of customer complaints, customer satisfaction score, average time taken to close a customer complaint, average time taken to serve a customer order. All this would be the KPIs which an organization would like to measure. So your performance measurement should be from a customer point of view. Now we learn about many techniques. Today, now you are learning about TQM, later you learn about Six Sigma, later you learn about BPR. So many techniques are there. All techniques have certain common points. So one of the common point is total employee involvement. This would be there in most of the techniques. There will be rarely a technique where total employee involvement is not needed. Similarly, documentation is something which is not compromised in any of the technique, because you will see a case study which will say that the organization wants to eliminate documentation because it doesn't add any value to an organization, but documentation is considered to be a critical, is considered to be a critical requirement in most of the techniques which you are going to learn. Later on you will learn about techniques like Six Sigma, VPR, PI. All techniques want organization to have proper documentation. So TQM focuses on ensuring all employees are involved in the exercise. There is a continuous improvement which is needed. I need a customer focus. Whatever goal I set would be based on customer requirements. Performance measurement is also from the point of view of customer side. Next is the something called the 6 C's of TQM. There are 6 areas which a TQM focuses on. Commitment, I think I have already discussed most of them. Commitment is basically, it says whatever quality improvement has to happen, it is part of everyone's job, and I also need a commitment from the top management on this. I want the top management commitment on this, because whatever is happening at the top management, that will set the tone for the entire organization. Let's assume there is some issue which happens and the top management is not bothered about it. They say, it's okay, or one time only, this customer we have not been able to meet the order, it's only one time issue, let's not worry much about it, let's focus on balanced job. If that's the tone at the top management, that will somewhere drill down at the bottom level also, and they will say that okay, the top management itself is not that much bothered about the customer needs, so we need not be bothered so much about the customer needs. So we want everyone in the organization to form part of or to focus on meeting customer needs, and I need a commitment from top management. If there is a commitment from top management, there will be a cooperation from everyone. If there is a commitment from top management, you will see a cooperation coming in from everyone in the organization. If there is no commitment from the top management, you will not see the cooperation coming from everyone. If cooperation starts coming from everyone, it will get into the culture of the organization. Somewhere the organization's culture would be that even if I am not measuring, for example, Bharadwaj Institute, this batch is not going to measure the customer satisfaction score. They are going to measure this, or they are not bothered about it. But somewhere it is now in our culture that we want the students to be happy, because we very well know that in a service industry, if students are not happy, it is going to lead to a lot of issues for us in future. So somewhere in our culture, in the DNA of the organization, this will get ingrained. So different organizations have different culture. Tata's have a different culture, Reliance has a different culture. So somewhere if the top management starts focusing on quality, you will get a cooperation from everyone in the organization, and that cooperation will lead to this becoming part of the culture of the organization. It will be that everyone in the company, whether you track something or you are not tracking something, they will focus on quality. Their focus would be on quality. Whether you are tracking it or not tracking it does not really matter to them. If it's tracked, okay. If it's not even tracked, it is okay. They want to focus on only quality products. Continuous improvement, which is also called as Kaizen. Customer focus, these two we have already discussed earlier. Control, okay. What is the control? Is basically review and control mechanism. Anything an organization implements, for example, if I want to implement TQM, why am I implementing TQM? I want an improvement in the quality. Once the quality improves, I'll also have certain extra benefits. My financial performance can improve, my competitive advantage can be there. So whatever you are implementing, you have a set target. You will have to measure the performance, whether that is actually happening or not. If you want a quality improvement, you will have to check whether there is an improvement in the quality or not. If there is an improvement in the quality, great. If there is no improvement in the quality, then there are deficiencies. You will have to take corrective action on those deficiencies. This control mechanism can also be called as standard costing, just a term which you will understand better. What happens in standard costing is you measure the actual performance of the company. When you measure the actual performance of the company, you get to know certain deviations and you take some corrective action. Next point is Deming's 14 points methodology. I didn't expect ICA will end up asking questions on something like this. There was an exam question even on Deming's 14 points methodology. So theory is something I don't know from where it can get tested, so they may end up asking from anywhere. So this is basically 14 key points given by Deming. You will see the points to be similar to what we have seen earlier. One, you will see a quality angle. you will see a customer angle being there, you will see an employee empowerment angle also, you will see an angle of top management support. Somewhere broadly these points will be there. Apart from that, maybe you will come across 2-3 new terms called as management by objectives, management by fear. I'll explain those terms as we proceed. Long term commitment towards improvement. I don't have anything to explain. If something is there, I'll explain. Adopt the entire new philosophy, entire management to adopt this, and not only the workforce. I'll explain this. Cease dependence on inspection. When we did your cost of quality, we said there is a prevention cost and appraisal cost. All the appraisal costs are waste of money technically. All appraisal costs are technically waste of money. Why do you need appraisal cost? If you are not confident of your product quality. If the product quality is very good, you are confident that, for example, I kept on doing inspection for some 1 lakh unit. I got 0 defect. Maybe I'll stop doing inspection. I'll stop doing inspection, and if I get any internal failure or external failure issue, maybe again I start the inspection process. So all forms of inspection is technically waste of money for an organization. It's technically waste of money. It is like a non-value added activity only. It is there because somewhere your quality has a problem. So if quality has improved significantly, somewhere they are saying you can eliminate the need for inspection. You can eliminate the need for inspection, because if you kept on inspecting and if you are dependent on inspection, what will inspection do is inspection will find out a defect being there. You will do a corrective action on the defect. All that is good, because you are converting an external failure into an internal failure. There are multiple industries where inspection don't happen. They don't do any inspection of the product if they are very confident of the quality. Certain industries you can't do much about it because you don't want to play with the customer's life. So there you may need for a inspection to be done. But Deming has said that an organization should somewhere stop their dependence on inspection as a activity. Inspection is not going to ensure quality improvement. Inspection does not lead to improvement in quality. In fact, inspection exists because you are not confident about the product quality. Move towards single supplier. Now he also told that an organization need to move towards single supplier. Why I need to move towards single supplier is, I need raw material A. I am buying it from supplier A, B, C, D, E, multiple supplier. There is a possibility that the composition or the quality of suppliers can be different. So when you use different batches of raw material, it could be possible that your end product which you are manufacturing, there is some difference among the end product. I don't want my customers to have a different experience. So when you are buying it from multiple supplier, for example, whatever raw material I want to use, for example, cotton. For shirt manufacturing, cotton is one of the raw material. You procure it from south, you procure it from north, you procure it from west, you procure it from east. There is going to be some difference among this product. Some of the raw material you may not have any difference being there, but wherever there is a possibility of difference being there, it is better to move towards single supplier. Improve constantly and forever. Institute training on the job, institute leadership. I will explain if something is needed. Okay, next is management by fear. I'll explain these terms. There are two terms: management by fear, management by objectives. You may use this at multiple places. Both are interrelated. What is management by fear is, you go on an audit. I tell that if you don't complete this audit on time, I'll cut down your study leave. So that's the point I tell the employee. I tell them that if you don't complete this audit on time, I am going to cut down on your study leave. So you wanted to take study leave for your exam, and suddenly I make this point to you. Now you are under a lot of pressure. You get under lot of pressure because somehow you want to complete this audit on time. Because of that, you will start making mistakes. So management by fear will not really work. Management by fear will not really work. Management by objective is similar but different. What I say is, if you complete this audit on time, I'll give you a reward of 20,000 rupees, or I'll give you some incentive, some reward would be given. So management by objective means I give you a target and I say that if you meet this target, I'll give you some incentive or some reward would be given. that also can be a challenge at times, that also can be a challenge. But in a practical world, management by objectives keep happening. Most of the organization go through management by objective. So management by fear is, if you don't meet, I'll give you penalty. Management by objective is same thing, but I'll give you reward, I'll give you some rewards. Rewards also can put you under pressure. This also can put you under reward, means I'll say that I'll give you extra 15 days study leave. So even if I tell you that also, you will come under pressure, because somewhere maybe you become motivated also, but sometimes some pressure can also come that you want to complete this on time. So when you want to do that, somewhere you end up compromising on the quality. The objective is, I don't want people to compromise on quality. So somewhere, because I have told you that this needs to be done, either I follow a carrot approach or a stick approach. Carrot approaches, I give you a reward. Stick approaches, I give you a penalty. So these are the two approaches which organization normally follow, carrot and stick approach. So either I try to penalize you or I try to reward you. Both will not work in TQM kind of an approach. I don't want my employees to be under any kind of pressure. Eliminate slogans, I'll explain this also. What is eliminate slogans is, I tell an employee that you could have done better. This is something which you could have done it this way. If you do it this way, performance would improve. So somewhere I am putting unnecessary pressure on the person by telling him something, saying that the commonly used slogan is, I tell him the person that you could have done better. Now could have done better sometimes can motivate, sometimes can again lead to issue, and it is basically saying you are harassing your workforce. Unnecessarily you are harassing your workforce. I could have done better, I would have done better if the processes were better. So you improve the processes, you are not improving the processes, and you are telling me that I could have done better. That doesn't really work. So Deming's 14-point methodology focuses on total employee involvement. I want everyone to be involved from the top management till the bottom management. I want everyone to focus on improving quality, and it's a continuous job. So it is not that there is an end to improving quality. There is zero end to the improving quality. You will have to continuously keep focusing on this. Provide training to people, have adequate documentation. There should be a better coordination among the various departments in the organization. Okay, next is plan, do, check and act cycle. This is part of TQM. I will not say this is part of TQM, this is part of anything. When we did chapter 1, I think there was something called as implementation of any strategy. If you want to implement anything, there is a pre-implementation stage, there is an implementation stage, and there is a post-implementation stage. Pre-implementation is called plan, implementation is do, post-implementation is check and act. Post-implementation is check and act. Pre-implementation is prepare a plan as to what you want to achieve, objective and action plan. Do, please implement it. After implementation, I want a review and control mechanism. I want a review and control mechanism. Check, measure the effectiveness, take corrective action. Plan, do, check and act cycle is nothing but pre-implementation, implementation and post-implementation. Criticisms of TQM. Somewhere the TQM will not work for a service industry. See, TQM has some standardized principle. A service industry works in a manner that they do customized kind of work. The culture will not be standardized there. The culture of a service organization keeps differing. Manufacturing organization, most of them would have a similar culture. So TQM will not work for service based industry. Standardized approach will not work there. Standardized approach is not going to work there. Extensive focus is there on documentation. I don't see this to be a bigger issue because that is a need for most of the technique, but that comes as part of the criticism, because suddenly a case study will ask what are the criticisms or why TQM is not to be implemented by an organization. So there is an extensive focus on documentation. Emphasis on quality assurance rather than improvement is you are trying to ensure that the quality is there rather than quality improving. Again, I don't see this to be a bigger issue because somewhere it does focus on continuous improvement. A continuous improvement is Kaizen costing is there. So because of Kaizen costing, what will happen is you will see a continuous improvement being there. I am going to move to the second segment of the chapter, which is on business excellence model. I do expect a question to come from this area because ICI has changed this. Technically your subject shouldn't have any amendments, but they have changed the business excellence model altogether. So earlier the business excellence model, there were two approaches, EFQM approach and there is a Balridge criteria of performance excellence. The two approaches continue to be there, but the contents of that have undergone a change. So if somebody, if for example you look at this has come in exam, I think in 2 times it has tested in exam. If you look at that solution fully, you will not understand anything because the answer has undergone a change. The model itself has undergone a change. Like you have 4 categories of cost called prevention, appraisal, internal failure and external failure. Suddenly I say that there are 8 categories of cost and the names are different. So something like that has happened. So if you read from the earliest study material, if some of you have an earliest study material and the latest study material, there is a May 21 study material and May 22 study material, you will see a difference in this model. You will see a difference in the study material itself. The latest study material has a different coverage as far as business excellence model is concerned, and the earliest study material has a different concept. The crux remain the same, but still there are a lot of changes which have happened. Let's first understand what does business excellence model say before I go to the PPT and explain it. What does business excellence model focus on is an organization are going to have multiple stakeholders. A company has multiple stakeholders. Many a times you take a short term view and focus on only one stakeholder called a shareholder or the owner of the company. Who are the stakeholders in a business? Tell me the stakeholders. Wait for a minute. Customers. Customers want quality and good price. They want a good quality product at an affordable price. Who else? Employees. Employees want good pay, career opportunities. So they would want something like this. Who else is there? Investors. They are the primary stakeholder. They are the primary stakeholder whom we always consider. Investors want dividend and capital appreciation. Who else is there? Supplier. Supplier would want maybe consistent orders and payment. The payment to them made on time, and they would want consistent orders from the company. Who else is there? Government. Government wants us to pay taxes. Who else? Lenders. Lenders want you to pay interest and principal on time. Interest and principal needs to be paid on time. I think there is also society. Society expects you to do CSR activity or take care of that people in and around them, provide employment opportunity. So there are multiple stakeholders and everyone expects something in an organization. Another issue is the requirements of the stakeholders are such that requirement of investor would have a conflict with requirement of customer. How does it have a conflict? Investor wants healthy returns. Customer wants good quality product at an affordable price. So if you want to increase the returns, you may try to increase the price of the product. Increasing the price of the product may start pinching your stakeholder called as customer. Your investor wants healthy return. So what you ended up doing is, instead of giving a hike of 12% which you normally give, you ended up giving a hike of only 5% to your employees. So when you gave a hike of 5% to your employees, it has led to healthy returns for the shareholder. But now this key stakeholder called as an employee is unhappy. You did not do any CSR activity. Why you did not do any CSR activity? Because CSR goes and sits in the debit side of the P&L. It just sits in the debit side of the P&L. So you thought there is no point of doing CSR activity, but still there are expectation that you will do CSR activity. So different people expect different, and sometimes you will have to see how do you balance the requirements of every people. You have to balance the requirements of every person. Just because I want my customers to be very happy, I cannot keep providing it at a very low price also, or I cannot have a very low margin also. So I need to have a reasonable margin, ensure I give a reasonable hike to my employees, good returns to my investor, take care of my supplier, pay taxes on time to government, take care of my lenders, and also do some CSR. I cannot keep doing CSR activity for the society also. So I need to balance everything. A business excellence model are basically tools which will ensure that you are able to take care of all stakeholders of an organization. There's another tool which you will learn in chapter 7 called as performance pyramid approach. So there are multiple tools which takes care of stakeholders. You will also learn something called as balance scorecard. So one of the tool which we are talking about is business excellence model. What business excellence model focuses on? Strengthening the management and information systems of an organization. Strengthening the management and information systems of an organization so that you create value for all stakeholders in a company. Objective is to create value for philosophy for developing and strengthening the management systems and processes, improve value and create value for stakeholders of a company. And you will have to focus on everyone. Develop quality management principle that improves efficiency, minimize waste, increase employee loyalty, achieve excellence in everything an organization does. The important concept of your business excellence model is basically it is a philosophy or it is something which is going to help an organization in strengthening their management systems and processes, Because of strengthening this, you will end up creating value for the key stakeholders of the company. How can you create value for stakeholders? Having a good quality product, improving employee loyalty, ensuring your suppliers are happy, ensuring government is happy, doing CSR activity. There are certain business excellence tools. You are going to learn about this in detail, and a question may ask, in fact in an exam they asked a question saying that in the case study they said what are the tools available. This is called as tools for business. The other name for this is common tools of business excellence. The model can also be called as tools. The first tool is EFQM, which is predominantly used, European Foundation for Quality Management. Balridge criteria for performance excellence. These two alone you discuss in your material. Balance you don't discuss. Singapore Business Excellence, Japan Quality Award, Australian Business Excellence Framework. Most of the companies have their BE framework on the basis of EFQM. In India, Tatas have their business excellence approach on the basis of Balridge criteria for performance excellence. So Tatas have it and they have it on the basis of Balridge criteria for performance excellence. They in fact call it as, I think, Tata Business Excellence Model, TBEM, Tata Business Excellence Model. They have made their model on the basis of Balridge criteria for performance excellence. So first thing is EFQM excellence model. So different model can talk about different thing. Net the focus is simple. I want to improve my competitiveness. I want to ensure taking care of all stakeholders of a company. Helps in improving the competitiveness of an organization. Competitiveness is achieved by giving primary importance to customer needs and taking a long-term stakeholder centric view. Long-term stakeholder centric view is just focusing on shareholder alone will not help. If you just focus on shareholder, you can get returns in that year. But getting returns in multiple years may not be possible. Now EFQM earlier when we were doing it, maybe your May 21 study material has something called as enablers and results. Now they have changed this as 3 modules of EFQM. Earlier we had something called as enablers and results. Results means what an organization is going to achieve. Enablers means who are going to help an organization to achieve. They have kind of changed that as 3 module. Module 1 is direction. That is what an organization is going to do. That is being discussed in module 1. In direction, explain why an organization exists and what strategy it uses. Module 2, they do their execution. Once you do the execution, you are going to end up getting results. In the results, you will bring in the review and control mechanism. So direction is basically pre-execution stage. Then you do an execution, and based on execution you see what results an organization is going to achieve. In results, earlier we were focusing on 3-4 types of result. I need people result. People result is for employee. I need investor result. Investor result is for the shareholder. I also needed customer result. What do a customer want? I also focusing on the society result. So different types of results an organization was focusing on. Just give me a minute. Okay, then you have something called as radar. Radar is called as diagnostic tool of your EFQM model. What is radar is going to do is, I was talking about that review and control mechanism. Radar is basically going to do the same review and control mechanism. R stands for result. What do an organization wants to achieve? An organization may want to achieve these 7 things: good quality product, affordable pricing, good pay and career opportunities for the employee, dividend capital appreciation for the investor, consistent orders for the supplier, and prompt payment of taxes, interest and principal, CSR activities and employment opportunities. These are the results an organization wants to achieve. So in radar, R stands for result. Then you see what are the approaches by which you can achieve this required result. What is the approach by which you can achieve the required result? Deploy the approach, look at the performance. In the performance, if you see things are not working well, please take a corrective action. Please take a corrective action if things are not working well. If things are working well, let's not worry much about it. Things are going fine. You will keep doing this on a continuous basis. You will keep doing this on a continuous basis. Result, based on result, I think, just give me a minute. I think there should be a, okay, I think I've removed the, there was a chart also. The chart will basically say from result, approach, deploy, assess and refine. It's a continuous cycle. It's a continuous cycle which will keep moving on. Now, what is the importance of EFQM model is, most of the business excellence model focus on ensuring few things. One, I want organization to be proactive. I want the organization to be proactive. Organization should become an agile organization is, whenever any change happens, they should be able to quickly adapt to the changes which are happening in the economy. For example, when COVID came in, if you are an agile organization, you will be able to prepare yourself, or you will be able to respond well to the market disruption which had happened at that time. So one is agile organization. Second, I want sustained performance improvement. I want a sustenance of the improvement which is going to happen, or sustained competitive advantage. Many of times what organization do is, they will do a good performance in 1 year, but I want that performance to sustain over longer period. That can sustain over longer period if an organization is able to implement EFQM, holistic view of current operation, usage of core competency. Core competency is unique strength to get result, drive transformation, agile organization, having a proactive kind of a management. Also many organizations feel if they are able to get an EFQM award, there are awards which are given. So if you are able to get an EFQM award, it will indirectly improve your goodwill, improve the reputation of yours in the industry. Self-assessment tool in knowing a relative position in the marketplace. Continue now. I think there is just a small discussion pending which is on your Balridge criteria of performance excellence. Okay. Okay, this is your Tata business excellence model. I just wanted to show you in a practical world what they are doing. This is Tata business excellence model. Tata business excellence model is a framework which helps companies to achieve excellence in their business performance. This is the chosen model by the Tata group to help in building globally competitive organization. TBM is based on, just give me, TBM is based on Malcolm Balridge National Quality Award model of the US, which is your Balridge criteria of performance excellence. To help improve organizational performance practices, capabilities and results, facilitate communication sharing of best practices, to help in guiding organizational planning and opportunities for learning. the criteria has some interrelated values. This is what this focuses on. Some of them would be as per TBM framework, sorry, as per your Malcolm Balridge. Some of them they could have changed also. Visionary leadership, so better leadership is needed. Customer driven excellence, organizational and personal learning, valuing employees and partners, agility, focus on the future, innovation, management by fact, social responsibility, focus on results and creating value, systems perspective. So these are the areas they focus on, and this is based on some 7 categories. Now the 7 categories is same as what you see here. Balridge criteria of performance excellence: self-assess their business, innovate and improve in order to achieve performance excellence, forms the foundation for various other excellence model. 7 categories: leadership, strategic planning, customer and market focus, measurement analysis and knowledge management, workforce, process management and business results. See, most of the models talk about one, you need good systems, good processes and better employees, and for managing the employees you need a good leadership. If all this is taken care of, automatically results would come in. So here also they focuses on a strong leadership, planning needs to be done, customer and market focus, employee management, workforce, process management, and based on this automatically the results will come for an organization. Focus on strengthening the internal function and communication, strong ties with the customer. Net, this is what is very critical. Strong and empathetic leader, employee empowerment. If you want your business excellence models to work well, you need good leadership and an empowered employees. What is empowered employees is you give them certain responsibility, you also give them the freedom to achieve it rather than putting lot of restriction. If you put in lot of restriction, then they will not be able to perform their task and they will not be connected to the organization. They may not work as per the needs of the organization or as per the culture of the organization. Okay, in this approach, in this chapter we are done with 2 areas. One was TQM, second was business excellence. I'll move to the third area, which is called theory of constraints. This could be 50% problem solving, 60% problem solving and 40% theory based area. Let me first explain what is theory of constraints. We did marginal costing. In marginal costing we learnt a concept called as limiting factor. This is an extension of that, but there will be a lot of adjustments. Here you will not have so many adjustments, but it's an extension of what you do in limiting factor analysis. Theory of constraints says that there are 3 measures for an organization. There are 3 measures of TOC. An organization can focus on throughput contribution, operating cost, investment. Any idea what is throughput? If at all you have come across this term, any idea what is throughput? What is throughput? Any idea? Okay, that is basically the rate of an output of a manufacturing process or the production which comes out of a manufacturing process. So what TOC says is an organization should focus on maximizing throughput contribution, while minimizing the operating cost and investments. The focus has to be on maximizing the throughput contribution while minimizing the operating cost and investment. The term contribution means sales less, selling price less variable cost. The term throughput contribution means selling price minus direct material cost. According to TOC approach, there is only one variable cost, which is material cost. Everything else is fixed by nature. According to this approach, there is nothing like a variable cost. Labor is not a variable cost. Some question what they will do is they will give direct material and other variable costs. If you are able to find some variable cost and they have given it together, let's not worry much about it. But by rule there is only one variable cost, which is your direct material. Everything else is considered as a fixed cost in this approach. Everything else is considered. Predominantly the gap is on the labor cost. See what happened is not few years back, maybe some 50 years back and all, labor was more like a variable cost earlier. Why it was a variable cost is you are paying on the basis of units produced. But currently, whether production happens or does not happen, you will be forced to pay your employee. So they believe that labor is not a variable cost, it is a fixed cost. What is operating cost is all cost other than direct material. All cost other than direct material. So my objective should be to cut down the operating cost. Objective should be to cut down the operating cost, all cost other than the direct material. Investments would mean all assets of the company, that is your stock of raw material, fixed asset, current asset, all assets of the company will come under the category of investment, land, building, plant and machinery. One more item which comes under investment is research and development. R&D is treated as an investment and not as an operating cost. R&D is treated as an investment. An objective would be to maximize throughput contribution while minimizing the operating cost so that the profit improves, while minimizing the investment. Profit on a denominator of investment is called return on investment. Profit on the denominator of investment will become return on investment. So I can improve my ROI if I am able to maximize throughput contribution while minimizing the operating cost and investments in the company. TOC focuses on increasing output, minimizing investment, decreasing operating expenses. Throughput contribution measures rate of generating money. Throughput contribution is equal to sales minus direct material cost. This theory basically feels that there is only one variable cost, which is your direct material cost. Everything else will have a fixed component in it. Investment include assets such as facilities, equipment, fixtures, R&D expense. Operating expense includes direct labor and all operating and maintenance expense. Now when I do TOC approach, we calculate an item called as TA ratio. This is one of the most important segment of the chapter. We calculate an item called as throughput accounting ratio. This throughput accounting ratio would be calculated in two ways. Two ways is, both of them are different, there is no linkage between this. One, you will calculate for factor of production. You will calculate it for factor of production. Factor of production is men, material, machine or money, and one you will calculate for product. For factor of production, the formula is TA ratio is equal to demand by supply. It's not demand of product by supply of product, don't link, because one student in the past batch asked, should I take the demand of the product divided by the supply? Supply means how much you can manufacture. As the formula, that has no linkage. This is demand of men divided by supply of men. When we did limiting factor, we said that a limiting factor is one whose demand is more than its supply. So here you calculate TA ratio, we multiply with 100. Then if the TA ratio is more than 100%, it is a limiting factor. If the TA ratio is more than 100%, it is a limiting factor, and we give a term called as bottleneck. The term, technical term we use is bottleneck. We don't use the word limiting factor, we use the word bottleneck. So if the TA ratio is more than 100%, it could be for men, could be for material, could be for machine, could be for money. In men it could be labor, department A, department B, department C, it could be anything. The formula is simple, demand divided by supply. Once you calculate TA ratio, let's assume there are 5 factors given in the question. You calculate a TA ratio for all the 5. You calculate for department A, department B, machine A, machine B, machine C. You calculate it for 5. Whichever has the highest TA ratio is the bottleneck. Everything else is also bottleneck, but I am not bothered about it. Anything more than 100% is bottleneck. Whichever has the highest TA ratio is the bottleneck. We will do a statement of ranking based on that bottleneck and a statement of allocation. Statement of ranking and a statement of allocation, which you learnt in marginal costing. The difference is, when you do statement of ranking here, you will not subtract labor cost. When you do a statement of ranking there, you will subtract labor cost also. So the difference is going to be there also. The contribution itself can be different. The contribution, the limiting factor is machine A for marginal costing as well as for this, but the ranking can be 1, 2, 3 here. There it could be 3, 1, 2 also, because it differs, because there you do it on the basis of contribution per hour. Here you will do it on the basis of throughput contribution per hour, which can be different. So this is one. Second, for the product also you will calculate TA ratio is equal to throughput contribution per hour divided by operating cost per hour. Like you were calculating contribution per hour there, it can be per hour per minute also, or it can be even per kg of raw material, depending on what is the limiting factor. Throughput contribution, not per unit, okay, it can be per hour, per kg of raw material. So whatever it is, throughput contribution per hour divided by operating cost per hour. If the TA ratio is more than 100%, it's a profitable product. If it's less than 100%, it's technically a loss making product. It's technically a loss making product, because you are not able to earn more than the operating cost. I want you to write this. I think it's not there in the PPT. It could be there in the base theory, but still write this. Is it there in the theory? Okay, it's there in the theory, leave it then. TA ratio, there are two types of TA ratio. One is for the factor of production and second is for the product. Factor of production will help you in finding out which is the bottleneck. Factor of production will help you in finding which is the bottleneck. Find the bottleneck, do a statement of ranking, do a statement of allocation. And for the product, you will do the TA ratio to understand which is more profitable, and which is loss making. I do this ranking, I said. The ranking of the product can happen based on throughput contribution per hour, or the ranking can happen even based on the TA ratio, because the denominator is going to be, see, for example, you calculate throughput contribution, it is 20 per hour, 15 per hour, 10 per hour. Ranking is 1, 2 and 3. Instead of 20, 15, 10, I will divide and calculate TA ratio. What will I divide this with? Throughput contribution per hour divided by operating cost per hour. Operating cost per hour is going to be same for all the three products. The operating cost per hour is going to be same for all the product. So instead of 20, 15, 10, you may say 200%, 150% and 100%, or it can be even in times. This can be even expressed in times. For the product, you can even express it in times. So your ranking can be on the basis of throughput contribution or TA ratio. You will understand this as we proceed. Anyway, I am going to do it in the question. Any doubts on this? So there are two types of TA ratio. One type of a TA ratio is done for the factor of production. Another type of a TA ratio is done for the product. Factor of production will tell you which is a bottleneck, and your product will tell you which is profit making and which is loss making. Let's come to question 16. This is a comprehensive question. This asks all the 4 requirements which normally can be there. PHI Limited produces 4 products P, Q, R and S using 3 different machines X, Y and Z. Each machine capacity is limited to 6,000 hours per month. Details given below are for July 2013. Selling price, variable cost per unit, machine are required, machine X, machine Y, machine Z, expected demand, find out the bottleneck activity, allocate the machine hours on the basis of bottleneck, ascertain the profit expected, calculate the unused spare hours. Go through the problem. Okay, now first thing I need to know is, do I follow TOC approach or marginal costing approach? Both can give different answer. This question has not mentioned the approach. Normally the term bottleneck is associated with TOC approach. One exam question it was given bottleneck, but ICA has followed marginal costing. So in this question marginal costing is impossible to do. Why it's impossible to do, I'll explain as we proceed. If you go by marginal costing, there will be two limiting factors. In this question there will be two limiting factors in the end. If you have two limiting factors and four products, you will have to do simplex method. You will have to go through simplex method, which will take away lot of time. So it may not be possible for us to do it in exam scenario. If question says follow marginal costing approach, you will have to go through simplex method. You will have to do this problem under simplex method if you have to follow marginal costing approach. So I'll show that question where both can be done also. Some question both are possible to be done. This question also both are possible, but marginal costing will take away significant amount of time in exam. So logically impossible for me to do marginal costing because simplex method will take away easily 1 hour in exam scenario. So I may not try to do it under simplex method. So this question I will first say that it is assumed that company is following TOC approach and solve it under TOC approach. Under TOC approach, good part is there can be only one limiting factor. So you do a ranking based on that limiting factor, allocation based on that limiting factor. And as such, one another point is ranking may not vary between marginal costing and TOC in this question because they have used the word variable cost per unit. They have not broken this down into material cost, labor cost and all. So this is for me variable cost. I cannot say that sales minus direct material because whatever is given I will have to follow that. So let's first calculate TA ratio. Based on TA ratio we will say which is the bottleneck activity. For that bottleneck activity we are going to do a statement of ranking, then do a statement of allocation. In the statement of allocation you will get the total contribution less fixed cost, it will give you the profit. Working note 1, computation of TA ratio. Computation of TA ratio. There are three factors where there is a limitation, which is your machine capacity. Machine X, machine Y and machine Z. These three are potential limiting factor or potential bottleneck activity. Nothing else is given, nothing on the labor side or nothing on the raw material side. So I may need I think 4-5 columns. Machine, 4 columns, demand, supply, TA ratio. Machine, demand, supply and TA ratio. Machine, demand, supply and TA ratio. There are 3 machineries X, Y and Z. These are potential bottleneck activities. What is the capacity limited to? 6,000 for each machine, that is the supply. Supply is 6,000 for each machine. Supply is 6,000 for each machine. Demand is 200 into hours per unit plus 200 into hours per unit, multiply and let me know. 200 into 20 plus 200 into 12 plus 200 into 4 plus 200 into 2. Demand into hours per unit. Demand into hours per unit. 200 into 20 plus 200 into 12 plus 200 into 4 plus 200 into how much? 7,000. Okay, machine Y 9,000. Machine Z basically 200 is the common number. 200 into 20 plus 12 plus 4 plus 2, 200 into 38, 200 into 47 and 200 into 29. This is the demand for the factors. I need 7,600 hours of machine X, 9,400 hours of machine Y, 5,800 hours of machine Z. If I go to marginal costing, multiple limiting factor problem. This is a multiple limiting factor. More than 2 products, graphical method can't do it. Graphical method will not be able to do because there is more than 2 products. TA ratio is demand by supply into 100. 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 Clear? Machine Y has the highest TA ratio. Machine Y has the highest TA ratio. Highest TA ratio, and the same would be considered. Same would be considered as a bottleneck activity. Same would be considered as a bottleneck activity. Okay, I forgot to write this. Before I even start solving, you can just say it is assumed company follows TOC approach. It is assumed company follows TOC approach. There will be question where they will tell you to do both marginal versus TOC. There are problems like that. Here my assumption is company is following TOC approach. Clear? Working note 2, statement of ranking. Statement of ranking, particulars and 4 products. My ranking step remains same as what we did in marginal costing. The only difference is you should subtract only raw material cost. That's the only difference. In this question, that also is not going to be different because they have given variable costs combined together. They have not broken it down into material, labor and all. Selling price, less variable cost. You can complete this, I am just writing the format. Contribution per unit. Which is the bottleneck activity? Machine Y hours per unit. Contribution per hour. Ranking. This is what you had done even earlier. Selling price less variable cost. Contribution per unit. Machine Y hours per unit, contribution per hour, and then finally rank. Do the statement of ranking, same as what we did in marginal costing. The difference alone is only material cost is to be subtracted. This is the ranking 3, 4, 2 and 1. Let me know if there are doubts here. Ranking is product S, then R, then P and then finally Q. Any doubts on this? Clear? Can you proceed? Working note 3, statement of allocation. Statement of allocation, some changes will be there. Statement of allocation. When we did marginal costing, all problems had only one limiting factor. Here technically I have multiple limiting factor. So when I do my allocation, I have to keep in mind that none of the department utilization exceeds 6,000. Z will not exceed 6,000, but Y or X, any of them can exceed 6,000. Y or X can also exceed 6,000. I will have to ensure that all of them are below 6,000. The utilization of all departments are below 6,000. And one of the requirement of the question is, what is the spare capacity of each machine? So I also want to know what is the utilization of each machine, so I can find the spare capacity. So when I do this, what we will do here is product units. We used to write hours per unit, hours consumed and contribution. Instead of doing that, product units, machine X consumed, machine Y consumed, machine Z consumed. I don't want any of them to exceed the limit which is set. The limit which the organization has set is 6,000. They don't have capacity beyond this. So I will have to ensure that utilization of X, Y and Z is below 6,000. Z will 100% be below 6,000. X and Y can exceed that number. I will have to keep that in mind. So I don't want X and Y both to exceed 6,000. Also I have to calculate the spare capacity. Last column is contribution. So write this: product units, X consumed, Y consumed and Z consumed. Product units, machine X consumed, Y consumed, Z consumed, contribution. Which is the rank 1 product? Product S. Product S. What's the demand for product S? 200. 200 units. 200 into 2. 200 into 3. 200 into 1. 200 into 2. 200 into 3 and 200 into 1. I will have to ensure none of X, Y and Z exceed 6,000 individually, not all put together, but none of them individually can exceed 6,000 hours. So 200 maximum demand I have put, I multiplied with 2, 3 and 1. Contribution is 200 into 1200. This is fine. As of now we are not going beyond the limit which was set. Which is the next rank product? R. Again demand is 200. Demand is 200. R is 200 into 4. 200 into 6. 200 into 2. Multiplied with 4, 6 and 2. I will have to keep in mind that 6,000 limit is not breached. Into 2,000 rupees. This total you need not put it now, as we keep adding finally you can put this. This also looks fine. I am able to meet the requirement. I am able to meet the requirement. This looks fine. Any doubts on this? Which is the next rank product? P, 200 units. I am writing 200, not sure whether it will happen or not. 20 is the usage for everyone. Okay, I am not still breaching the limit. Still the limit is not breached. We are below 6,000 in each of the departments. 200 into 20. We are still below 6,000. As long as I am below 6,000, I don't have a problem. We are not exceeding the limit as of now. Any doubts till now? Which is the next rank product? You listen for some time now. Listen for some time. I am writing 200 here. 200 will not be possible, but I am just writing it into 12 into 18 into 6. So X is going beyond 6,000, Y is also going beyond 6,000. So I delete this. I am just taking this as a balancing figure. 800 is the balancing figure. If you have 800 hours of X, if you have 800 hours of X, which is the balancing figure, how many units of X is needed for 1 unit of Q? 12. So 800 by 12, 66, I round off to 66, okay. I round it off to, I took X as a balancing figure. I took X as a balancing figure, which is 800 hours. Listen for some time. I took X as a balancing figure, 800 hours, 800 divided by 12. This is what you used to do in marginal costing also. How many how many hours per unit for Y? This is not possible because Y is exceeding that 6,000. Y is exceeding that 6,000. I took the balancing figure. I started with X, took the balancing figure, but the problem is Y is going beyond. Y is going beyond 6,000. I cannot allow that to happen. So I am deleting this again. I take this as balancing figure. Balancing figure is 200. Balancing figure is 200. 200 divided by how many hours per unit for department Y? Which is 11 units. 11 units. And listen, 11 into 12. 11 into, what we need to do is, for once we are reaching closer to the full utilization, once we are reaching closer to the full utilization, whichever is having a TA ratio of more than 100%, technically they can exceed that limit of 6,000. What you should ideally do is, first take the primary bottleneck. What was the primary bottleneck? Machine Y. Take machine Y as a balancing figure. Take machine Y as balancing figure. In a rare situation, let's assume this was not 11 into 12, this was 11 into 80, assuming it needed 80 hours per unit, assuming it needed 80 hours per unit, just a random example, okay. Practically this will not happen. If it was 80, then this would have become a limiting factor, but just for discussion sake, it becomes 11 into 80, then this exceeds that 6,000 limit, this exceeds that 6,000 limit. So you will have to delete this again and then take X as balancing figure. So final balancing figure can be machine X or machine Y. 95% of the question, it will be the bottleneck factor only. A rare scenario, it can even turn out to be a non-bottleneck factor. So bottleneck factor, limiting factor is 200 hours. Balancing figure is 200 hours. Based on 200 hours, I say 11 units. Based on 11 units, 11 into 12, 11 into 6. Just ensure total do not exceed 6,000. Total do not exceed 6,000. If total exceeds 6,000, then what you have done is incorrect. You will have to delete that and then again do a trial and error. You will have to do a trial and error. Clear? Any doubts on this? Same balancing figure, but you may have to do extra check here. You will have to do a extra check in this type of question. Any doubts on this? Complete this now. From the table I am doing it because there is a requirement. Look at unused spare hours of each machine. So you will anyway have to answer that. If that is not asked in the question, technically I don't need it. Let me know if there are doubts here. Clear? I'll subtract fixed cost, get profit in this table itself. Requirement of the question was to calculate profit also. Profit is 3,16,400. Part 2 and I think part 3 is done. Allocation of machine hours and profit computation. Allocation of machine hours and profit computation is done. Allocation and profit calculation is completed in this table. Same as marginal costing, just that there are few changes. This problem under marginal costing approach will take away a lot of time because you will have to do it under simplex method. And finally, unused spare capacity of machine X 6000 minus 5332. What is utilized is 5332. They wanted the spare capacity. We are wasting this capacity because I don't have machine Y. Unless I have machine Y, I cannot use this capacity. The unutilized capacity any doubts on this? Done. Okay, assume this question goes ahead and asks something called as TA ratio for the product. That's not asked in the question, but I'm going to do TA ratio for the product now. Now right, compute TA ratio for product. TA ratio for product, particulars and for products. TA ratio for product. The numerator is contribution per hour. It can be per minute also, whatever is the information. Contribution per hour. Contribution per hour. 150, 133, 333 and 400. Contribution per hour. Operating cost per hour. Operating cost per hour. The limiting factor for us is machine Y. What is the capacity of machine Y? 6,000. Operating cost in this question is 9,50,000. Operating cost is all cost other than variable cost. All cost other than variable cost, even labor, everything would get included there. They have given fixed cost to be 9,50,000. So operating cost per hour is 9,50,000 by 6,000. 9,50,000 by 6,000. 158.33. 158.33. 158.33. Technically P and Q are loss making product for the company. Technically P and Q are loss making products. If I don't have any utilization of R and S, I can't do much about it, but otherwise P and Q are waste of money only. I may not have adequate capacity, adequate demand for R and S, so maybe I am manufacturing P and Q, but technically they are loss making product. TA ratio in bracket times, I am expressing it in times. Contribution per hour by operating cost per hour. Contribution per hour by operating cost per hour. If you do into 100, it is in percentage. I am doing it in times. Normally for the product we do it in times, for the factor we do it in percentage. You can even do vice versa also. TA ratio in times. Product R is earning 2 rupee for 1 rupee of expense. Product S is earning 2 rupees 50 paise for 1 rupee of expense. P and Q are earning less than 1 rupee. P and Q are earning less than 1 rupee. Ranking can be done even on the basis of this. It will be the same ranking. 1, 2. This would have been the ranking earlier also. 3, 4, 2, 1. The ranking is going to remain same because the denominator is the same. The denominator does not change. You can do a ranking based on TA ratio. You can do a ranking based on contribution per hour. Clear? Yep. Fixed cost is not only for? Yeah, all put together, correct. Yeah, so everything is divided by 6,000 because 6,000 hours is equal to 9,50,000. No, for all products put together, you can utilize 6,000 hours. No, I am not assuming that way. My operating cost per hour for 6,000 hours is 9,50,000. You use it for any product, you are spending technically 158 rupees. So, if the factory is running every hour, factory is spending 158 rupees per hour technically. Whether you use it for product P or Q or R or S does not matter. TOC basically will say that at least earn 158 rupees per hour. If you are not earning 158 rupees per hour, technically you are losing money. But why still we produce P and Q? Because if you keep idle, you will earn 0 and spend 158 because it is a fixed cost. So you are spending 158.33 per hour. Ideally try to have those products which you give more than 158 rupees. If you are earning less than 158, you can continue doing it, but technically they are not earning money for the company, they are making losses. But stopping that product will also not be feasible because you will end up making a huge loss. So ideally, or what this company can do is, can they bring down the capacity from 6,000 to maybe 3,000 because P and Q are loss making, and if I am bringing it down to 3,000, would the fixed cost also become half? If it is becoming half, then logically it makes sense for me to make my capacity half. From 6,000 I will bring it down to 3,000 or whatever number, I will bring it down. Why I am bringing it down is P and Q are not profit making products for me. Technically they are not making profits. If fixed cost can be reduced, unfortunately fixed cost by nature may not come down, and if it does not come down by reducing capacity, your operating cost per hour from 158 will go up because your denominator comes down, your cost is not coming down in the proportion, same proportion. Any doubts? Yep.
We can take divide by 18,000. We have 18,000.
No, the point is this 90 lakh or whatever, that 9,50,000 is incurred for all the three resources put together. I am not bothered about resource X and resource whatever. The first, I am not bothered about resource X and resource Z. For me, the bottleneck is resource Y. So I am dividing it by 6,000 hours, and whatever this contribution per hour you have calculated, you calculated this contribution per hour only for machine Y. You did not put X, Y and Z put together when you calculated the contribution per hour. So even in your operating cost, you cannot add all the three and reduce the operating cost. When we computed contribution per hour, the denominator was only the machine Y hours. You did not say X, Y and Z put together. We did not do that. What organizations keep doing is this approach. They'll identify the constraint. What was the constraint? Is casting versus bonding. In this example, the bonding operation was the constraint. Exploit the constraint, that is, you try to analyze it and elevate the performance of the constraint. So I have found out which is the constraint now. The bonding operation is the constraint. I analyze it, see what I can do to this operation, and always your non-limiting factor can be men, material, machine, any of them. They should always be subordinate to the main constraint. Main constraint is bonding operation. So your casting operation should move in line with the bonding operation. You cannot keep doing casting operation just because you have capacity. Elevate the performance of the constraint is somehow see how can you increase the bonding utilization. Once you do this, you will keep repeating the process. What will happen is, today bonding is a constraint. This bonding capacity from 60,000 you increased it to 90,000. Casting will become a constraint. You try to elevate the performance of the casting operation, bonding will become a constraint. This is a never ending process. You will keep improving the performance of one. Once you keep improving this, finally demand may become a constraint. So something or the other will keep constraining the operations of the company. So then you try to enhance the demand of the product. Demand enhancement doesn't go through these 5 steps, but once you start increasing the demand of the product, some of them will again become a constraint. So first you will have to identify the constraint, see how you can exploit, how you can do. So organizations do something called as Kaizen costing. They do some value analysis, they do a process analysis. So in the bonding operation, I get to know that you spend 50 minutes per unit. This 50 minutes, if you can bring it down to 45 minutes, then your 60,000 can go up to 65,000. So you are elevating the performance of the constraint. How 50 can become 45? You try to analyze what are the activities you are performing, and in that you get to know that the machinery utilization of 50 can come down to 45 or can come down to 40. So this is what you will end up doing as 5 steps to elevate the performance of the constraint. Any doubts on this? Okay, TOC advantages and disadvantages. Advantages is TOC is basically going to help you in enhancing the throughput contribution, or enhancing the rate at which the company is generating money. So you will try to have more productive machine, better product mix, better customer relationship. Objective is to produce only what you are selling. So there will not be any major inventory in the company. There will not be any major inventory. Other things are broadly fine. Ability to meet shorter lead time, that can even happen with marginal costing. More flexibility, better customer service, all this can happen even with marginal costing. Here the major part is you will have a better product mix considering the nature of the industry. Disadvantages is somewhere, because you are trying to enhance sales and volume, there is a possibility of quality deterioration. There is a possibility of quality deterioration, which is opposite of what you see in the advantage. In the advantage we say better product mix, better customer service, but somewhere the quality deterioration can happen if you are trying to enhance. We saw a problem where there was C100, C125, there the utilization was 122.5%. when you are trying to utilize 122.5%, there is a possibility of quality deterioration happen. A case study can come from anywhere. So suddenly a case study may ask what are the advantages and disadvantages of following a TOC approach. I don't have a choice, you will have to read entire part of the theory. I told you to record videos for every chapter. By now you should have, recording audio for every chapter. We have already completed 3 chapters. Learning linear programming audio may not be needed, but for 3 chapters ideally an audio should have been recorded and you should have kept on hearing it multiple times. This chapter will also get over mostly in the next session, so by that time you should have recorded the audio. The audio will be for maximum 10-15 minutes. If it's going beyond that, then split it into 2-3 audios and then start hearing them on a everyday basis. I'll move to the next area, which is called supply chain management. This is one area which is frequently tested in exam from a 20-mark case study point of view. I think till now, I think 6-7 attempts of new syllabus have happened. In that, supply chain management has already been tested 2-3 times for 20 marks. They have ended up asking case study from this area frequently in exam. Now let's first understand what is supply chain. See, the product has to reach the ultimate customer. So customer is there. Before customer, there could be a retailer. There could be a retailer. Before retailer, there can be a wholesaler or a distributor. Wholesaler or a distributor. The company can decide whoever they want to. Then there is a manufacturer. I am the manufacturer. I am the manufacturer. There is a manufacturer. After this, there could be a warehouse where the distribution is going to happen. From the warehouse, it goes to the wholesaler or the distributor. From there, it goes to the retailer. From there, it goes to the customer. For the manufacturer, there can be an RM supplier. Supply chain basically includes the raw material supplier who supplies the raw material to the company, manufacturer who convert the raw material into a finished product, the warehouse where the product is stored. From the warehouse, it goes to the wholesaler or distributor who distributes the product, retailer who retails the product or who makes the product available to the end customer, and the customer who buys the product. Supply chain basically includes all of them. It includes all of them. Raw material supplier, producer who convert the raw material into output, warehouses that store, distribution center that deliver to retail stores, retailers who sell the product. If an organization wants to have a competitive advantage, that competitive advantage can even come through a value, even through your supply chain. If the supply chain is better controlled and it's efficiently managed, an organization can have a competitive advantage. If your supply chain is inefficient, that is the way you distribute the product is inefficient, the cost per unit will go up at a retailer end, finally it will go up at the customer end. Or your supply chain is not able to provide the product to the retailer on time. The product does not reach the retailer on time. If it does not reach the retailer on time, again there is an issue for the company. There is something called as an upstream supply chain and there is a downstream supply chain. Upstream supply chain is above manufacturer, whoever is there. Downstream supply chain, I could have put it like this. Upstream is basically people who are above the company and downstream is people who are below. So it will start with raw material supplier, manufacturer, then you have your wholesaler or distributor, in between you can have a warehouse also, retailer, and finally customer. Someone who is below the manufacturer are basically part of downstream supply chain, something who is above the manufacturer are part of upstream supply chain. Organization has to control its upstream supply chain as well as downstream supply chain. It has to have effective control over both of them in order to ensure that the customer demand is met on time and in an efficient manner. Entire network of organization that design, produce, deliver and service product. It includes production planning. Production planning is at the manufacturer end. Purchasing is from the raw material side, from the supplier side. Purchasing and material management is interrelated. Distribution, customer service and forecasting. Different way of it. Integration of key business processes from end user through original supplier that provide products or services and information that adds value to primary to this guy and also to the other stakeholders in the processes. Other stakeholders will include even your supplier. There are suppliers, there are wholesalers, there are retailers. Objective is to add value to all of these people. So for managing the upstream supply chain and downstream supply chain, you will have certain tools available. So we'll learn about these tools as we proceed. There are 8 key processes as part of your supply chain management. One is customer relationship management, that is on the customer side. We technically call it a CRM, customer relationship management. There are 3 types of CRM. I think that is not discussed in this chapter, that is discussed I think in chapter 10 or 11. There is an operative CRM, there is a collaborative CRM and there is a strategic CRM. CRM is nothing but maintaining data of the customer. Bharadwaj Institute would like to collect as much data as possible from students. Once I collect the data, I'll get to know that our students are primarily coming from Chennai or maybe primarily coming from non-Chennai. I'll get to know that our students are predominantly either men or women. We may get to know that the students are mostly in the age group of 25 to 30, age group of 20 to 25. Based on these extra information, I can prepare my marketing strategy. So CRM is basically going to collect as much information as possible about my customer. This will help me in also doing my demand management, also my production planning. My production planning can happen based on this, because I'll get to know what customers are needing. Amazon has huge data. Because it not only collects the data about what you are buying, it also has the data on what you are searching also. So when you are trying to access Amazon, what you are searching, what you are clicking, all this information will somewhere be passed on to their customers, passed on to the retail outlets or the sellers who are selling there, and they will do something called as data analytics on this, and which will ultimately help you in knowing what do customers want. So the first tool is customer relationship management. Supplier relationship management is having control on supplier information, that is, when did supplier deliver the product which I asked him, is he on time, is he delaying, what is the quality, are there any rejections happening with the supplier. Finally, the supplier relationship management can help me in rating my supplier. Customer service management is an extension of your CRM. Demand management, order fulfillment. Manufacturing flow management is based on the demand which I am getting from my customer. I'll have to decide my manufacturing flow. Organizations are increasingly trying to move to a model where they manufacture based on the demand of the product and do not want to maintain stock, which is called as push model and pull model. I'll explain these two models in a minute. Push model and pull model of maintaining inventory. Then there could be some returns which would come from your customer. Basically everything which is related to the customer, data about the customer, service to the customer, any returns you may have to give. How do you manage your manufacturing flow so that you are able to fulfill your customer demand. Product development and commercialization is based on the data which I get from the customer. I may get to know that there is a XYZ requirement of the customer which I am not able to fulfill. So maybe I start manufacturing or I start designing a new product so that requirement. In the Amazon, people keep searching XYZ product and that product is not there. Or maybe people are searching some product which fulfills XYZ requirement. Once that information is in, maybe I'll be able to do. Now, there are two types of model. There is a push model and a pull model of maintaining inventory. Now, in a push model, what happens is customer places an order. This information goes to retailer. Retailer gives this information to wholesaler. Wholesaler gives information to the company, and company will produce based on the demand. So what happens here? Sorry, this is pull model. Under a pull model, what will happen is I am going to produce based on what the customer wants. Mostly this happens in case of your car manufacturing. Under car manufacturing, this is what is happening. People will place an order. Based on the order, you do the manufacturing and then supply it. Here what happens is you are not going to maintain any inventory. Pull model, stocks are produced based on the actual demand. Under the push model, you anticipate what the customers would want. So manufacturer will produce. He will give it to the wholesaler. Wholesaler will give it to the retailer. Retailer will display it. You go to the shop and buy what you want. Sometimes you will see the retailer trying to push you buy some product. He will say this is a better product, don't buy that product. All that is because you want to somehow push that product to the end customer. Just give me a minute. supplier forecasts the demand, manufacturer produces based on the forecast, distributor is going to maintain it, retailer is going to stock, customer is going to purchase what is available. This model would be used if the demand is low for a product. If there is a low demand for a product, or if this product is not that well known, you would try to follow this approach. When you follow this approach, the problem is you will have to maintain a lot of inventory. Inventory pile up can happen at every stage. Supplier stage, inventory can pile up. Manufacturer stage, inventory can pile up. Distributor stage, inventory can pile up. Retailer stage, inventory can pile up, and customer will buy whatever is available. He will see whatever is available. Organizations want to move towards this. Customer places an order, your retailer replenishes the stock, distributor replenishes the warehouse, manufacturer is manufacturing it, and supplier is giving the raw material based on this. When I say customer orders, you don't wait always for the customer order also. You try to forecast what the customer is going to do. So rather than waiting for the actual demand, you may sometimes anticipate the demand. You will get some information saying that, looking at the past history, organizations try to follow both the push model and the pull model. Pull model is preferable because it will lead to zero inventory in the process. There is going to be zero inventory or negligible level of inventory levels. And somewhere for this to succeed, there is this e-commerce which is going to help out a lot. For your inventory maintenance or for smooth management of supply chain, e-commerce is something which is going to extensively help. In fact, if e-commerce was not there during COVID times, entire supply chain would have collapsed. Entire supply chain would have collapsed if during the COVID scenario there was no option available for e-commerce. E-commerce basically does not mean only purchase. There is something called as e-sourcing, e-procurement, e-payment. All this have happened. E-sourcing is, earlier what used to happen is people used to float tenders, people were manually giving the tender and then you were deciding where to buy from. Now today every corporate can search online, they can do a discussion and based on that they will decide where to buy from. E-procurement, your order, your purchase order goes through in electronic mode. Invoice comes in electronic mode. There is a need for physical invoice. I am not very sure whether still there is a need, but from a taxation point of view there could be a need for physical invoice, that is coming in, but mostly the order goes through in online mode, your invoice comes in online mode, your payment happens in online mode. So that is the development which have happened on the management of supply chain. Role of e-commerce benefits both customer and manufacturer. How does customer gets help? Because customer gets now wide variety. He gets wide variety, multiple suppliers. He has the option of buying it from multiple supplier. Manufacturer is able to expand the market. Manufacturer is able to expand the market quickly now because he is able to reach earlier he was selling only in South India. Now he is able to sell south, north, west, east. He can even move outside the country also. That is from a manufacturer point of view. You will be having lesser inventory. It can be opposite also because under e-commerce you have to quickly supply the product. There is a possibility that you may end up, because in e-commerce and all you cannot say that I will get an order, start manufacturing it and supply it in 20 days, 25 days. That doesn't happen. There is a need to supply it in 10 days or 5 days, but based on the demand which is happening, somewhere you will know what to stock so that you are able to quickly supply that product. Send products to market very quickly. Earlier what used to happen is creating a market was very difficult. For example, today also if Bharadwaj Institute wants to introduce a new course saying that I want to start XYZ course, we may not do physical classes initially. If I am able to introduce an online course, it is possible for us to quickly move to the market, get few students, and as market picks up, maybe I will then introduce a physical course for that. As I was talking about upstream and downstream supply chain, there is an upstream supply chain which is someone who is above you, there is a downstream supply chain which is below you. For the upstream supply chain as well as the downstream supply chain, there is going to be information flow, material flow, capital or finance flow. That is, there is some flow of information from the manufacturer to the supplier. There is some flow of information from the end customer to the manufacturer. Flow of information, flow of material, flow of capital. So the manufacturer will discuss something with the raw material will discuss something with the manufacturer. There is going to be flow of information, flow of material and flow of capital or finance. Similarly, manufacturer will discuss something with the customer. When I say discuss, basically he is going to provide some data and this guy is going to also provide some data. The customer is going to provide, the customer or the retailer or the manufacturer. This flow is called as upstream supply chain and downstream supply chain. What would raw material supplier give to the manufacturer? From a flow of material, information and finance point of view, what kind of information the raw material supplier will give to the manufacturer? What kind of information he may have to give? Think about an information supplier will have to give to the manufacturer. Availability of the product or delivery schedule. Some delivery schedules may have to be given. Manufacturer may give an information called as the demand, the information on the demand or the purchase orders may be shared by this guy to the other person. Information or orders and POS data. Orders is I am passing an information on the order. I am saying that this is the information I want. Manufacturer will give information on orders to the supplier. Supplier will give information on delivery schedules and capacity. See, what looks like an upstream supply chain from a manufacturer point of view will look like a downstream supply chain from the point of view of the supplier, because supplier is interacting with his customer. So from an upstream point of view, orders and POS, any idea what is POS data? Point of sale, what does that mean? What does that mean? This is an extremely important information. What do you mean by point of sale data? Sorry? No. Barcode scanning, okay, somewhere related. So I am selling my products. Let's assume I am P&G or I am HUL. I sell my product to so many wholesalers, so many retailer, and finally it goes to so many retail stores and so many supermarkets and all. If I have access to point of sale data, that is at every store on a daily basis, how many units of product A is getting sold, how many units of raw material, how many units of that product is available. You can take any product, you can take maybe Head and Shoulder shampoo. So how many units is getting sold? Is the 100 ml getting sold, 50 ml getting sold, 350 ml getting sold, 500 ml getting sold? So which product is getting sold on a daily basis, which location it is getting sold? This is a huge bulk of information which the organization will analyze later. They like to analyze this later to understand which SKU is moving, stock keeping unit, which product is moving, which product is not moving. So if 200 ml is not which customers are preferring, maybe I'll discontinue the 200 ml product itself. So I'll get to know, because for the same product they'll have multiple options, multiple variants will be available. POS data is an extremely important information. Material is returns, repair and after sales service. If the customer is returning some product or asking for some repair and after sale service, that could be the flow of material from the customer to the manufacturer, or from the manufacturer to the supplier, If somebody is interacting with a person who is above them, they are called as upstream supply chain. Manufacturer doing something with the customer is part of downstream supply chain. Customer doing something with the manufacturer is part of the upstream supply chain. So there could be returns, repairs and after sales service. From this side there could be product and parts. From the customer side, he will have to make payments to the manufacturer, or customer making payment to the retailer making payment to the wholesaler finally making payment to the manufacturer making payment to the supplier. From this side I'll pass information like invoices, pricing and credit terms related to the capital or finance. What is the pricing I am offering? We'll learn a little bit more in detail about this upstream supply chain and downstream supply chain, that is how do you manage it and what role does a e-commerce play. So this I'll see it in the next session. If there are any doubts you can let me know. Supply chain basically represents all people who form part of ensuring the product reaches the customer. It includes supplier who supply the raw material, manufacturer who manufacture the product, wholesaler where the product, warehouse where the product is stored, distributor who distributes the product, retailers who retail the product, and the end customer who buys the product. Clear? Any doubts on this? With this I'll end today's session. In today's session, first let's learn about what do I do for upstream supply chain management. Our analysis is from a manufacturer point of view. The manufacturer is the main person. From his point of view, how will he do the upstream supply chain management and how would he do the downstream supply chain management? It is not from a point of view of a customer doing with the retailer or retailer with the wholesaler. Our discussion would mostly be from a point of view of a manufacturer. Same points can even come if a retailer interacts with the wholesaler or a wholesaler interacts with the manufacturer. In upstream supply chain management, I think the downstream supply chain management discussion is significant. In upstream supply chain management, we are going to learn about how do you manage the supplier relationship and how can you use information technology, use of IT for smooth management of upstream supply chain. First is relationship with suppliers. The relationship with suppliers is managed through a tool called as supplier relationship management, SRM. For a customer relationship management, we have a tool called as customer relationship management. Some of you could have come across this term called as customer relationship management when you would have gone for audit. Some of you, if at all, I think mostly in a big four kind of a situation, there's a possibility then when you would have interacted with your clients, not in the stat audit kind of a stuff, but if you have done something else. What does a CRM store is? CRM is basically going to store customer data. SRM, supplier relationship management, will store the data on suppliers. What kind of data it can store? It can store data on what are the products the supplier can offer, at what price he is likely to offer, what has been the past instances of quality with this supplier. You could have ordered some 100 times with the supplier. You would have done an inspection at your end. When you did an inspection, 95% it went through, 5% of time there were rejection. So quality, delivery information can also be stored. 100% of the time you would have given some delivery schedule saying that I want the product in 2 days, 3 days, whether he has met that delivery schedule or he has not met the delivery schedule. So that can help you in giving the reliability. Whether the supplier is able to come out with some new products. So whenever there was a need for new product, whether the supplier is able to come out with, whether the supplier is able to give you some cost reduction. When there are pressures in the industry, does the supplier have the flexibility and is he ready to participate in cost reduction? Is he ready to do some innovation so that costs come down? SRM is basically going to store all data, transactional data about the transaction data is basically all your past purchases which have happened, and also some qualitative information, quantitative and qualitative information. What SRM can finally help you in doing is, it can also help you in doing a vendor rating internally. You can do a rating of your supplier based on these past information that can help you finally to ensure whether you want to continue dealing with that supplier or you may even start moving out from the supplier. Factors influencing a supplier selection: innovation, quality, reliability, cost, price reduction. These are the things which I want from a supplier. Supplier relationship management can help in managing the entire upstream supply chain. Company should have a suitable supply strategy considering sources, number of supplier, cost, quality and speed. Post COVID, a lot of organizations have started focusing on this because during COVID times, many tools would say that you need to move towards a single sourcing strategy. A single sourcing strategy has its own set of disadvantages because if anything happens to the supplier, you will get significantly impacted. So you will have to take a call whether you need to do a single sourcing or you need to go for multiple supplier. Sources, number of supplier. Sources is whether you want to depend only on indigenous sources, whether you want to go for imported sources within the country, also other multiple states from where you can do the procurement. Cost, quality and speed. So SRM is going to help you in having all this information. That's a tool which will capture all this information. It could be integrated with your ERP which an organization maintains, because in ERP all transactional data would be covered, all procurements, all receipt of material, all things would have been covered. So you can link it with your ERP and maintain this. Now for managing this upstream supply chain, practically information technology is one of the important components of your upstream supply chain management. For managing this, organizations are increasingly moving towards three things. Earlier, what used to happen is, if I have to buy a product, maybe let's assume still most of the PSUs do this. If they want to buy a product, they will ask for tenders, and these tenders would mostly be advertised in the newspaper, and a tender information would be there. And if you want to quote for the tender, you will have to get the form, give a physical form to the company. Still this happens in few companies. I can move to a model called as e-sourcing, e-procurement and e-payment. That is, the tender or the invitation will happen in an online mode, and if you want to participate, you can submit your bid in the online mode itself. We don't want you to submit the bid in the physical form. The bid can be submitted in the online form. Procurement, e-sourcing, e-procurement and e-payment. One, the tenders can happen in the online form. Post that, I can give my purchase order, I can submit my purchase order, the final order, to a specific supplier, again in the online mode, and the payment can also happen in the online mode. This makes it easier to manage the upstream supply chain. Procurement and logistics, e-sourcing, invitation to tender, e-purchasing, electronic catalogs, recurring requisitions, electronic purchase order, and e-payment, e-invoicing and fund transfer. Everything is trying to move to the electronic mode. When it moves to the electronic mode, what happens is, some physical movements can be there, but most of the, I don't see, other than invoicing, other things entirely can happen in online mode. We wouldn't want to send a physical purchase order. You send an online purchase order, that kind of takes care. I want to know what are the products are available. He will send me an online catalog itself. He is not going to send me a physical catalog and say these are the products available. So I can get an online catalog, I can watch it there, understand what are the products offered, what is the pricing being done. So IT is playing a major role in managing your upstream supply chain. One part is procurement. They are also linking logistics part. Why logistics is needed is because from the supplier end, the product has to reach the manufacturer. Basically you are talking about inbound logistics. There are two types of logistics. Inbound logistics is for your upstream supply chain. We also have outbound logistics, which is for your downstream supply chain. Next comes the downstream supply chain management. Here there are multiple components. You will learn about how do you capture customer information. You will learn about how do you analyze the customer. You will learn about how do you calculate the profitability. We'll also learn that sometimes I may say no to few category of customers. Organization would go ahead and say no to few category of customers. There are possibilities that you are making losses with few customers. So CRM or the downstream supply chain management will help an organization in analyzing the customer characteristics, customer profitability. Based on that, you can decide whether you want to retain the customer, do an extension of the customer. What is extension? You will learn later. And sometimes you may even move out of a customer. Okay, so one is this part, which is your customer relationship management, analysis of customer and their behavior, customer account profitability, customer lifetime value analysis, customer selection, acquisition, retention, extension. Sometimes you may even do in your selection and acquisition strategy or in retention strategy. The retention may also include an item called as moving out of the customer, saying no to a non-profitable customer. Relationship marketing is this can become a direct theory question sometimes in an exam. There is something called a 6 markets model. Relationship management is basically taking care of your existing customers as well as potential customer. And finally, how IT can help you in managing the downstream supply chain, and what is brand strength of a company and what kind of strategies can be implemented to ensure or to improve the brand strength of a company. the first thing, let's look at relationship marketing. RM is basically going to help you in retaining your existing customers and attracting new customers. RM helps the organization to keep existing customers happy and to attract new customers. Now what relationship marketing said is that there are 6 different markets which are there, and you need to ensure managing all these 6 markets or all these 6 people so that you are able to serve your existing customers well and also attract new customer. Now in the 6 markets model, you will also include something called a supplier market also. Basically you need good suppliers, so that if you have good suppliers, you are able to serve your customers in a better manner. So this also will help you in doing better marketing strategy. Now what is there in 6 markets model is there is something called as a recruitment market. What is recruitment market is? This is a place where you will find the potential employees of the company. You will find the employees of the company. There is a supplier market. Here you are going to find the suppliers of the company. There is something called as influencer market. What is influencer market is? These are the people who influence customers to buy the product. There is a referral market. What is referral market is? You are part of our referral market. You will go to some other student and say that we went for this classes, we like the classes. You may also go to this academy for your SCMPE classes. So somewhere you will form part of our referral markets. So there are 6 markets model. Internal market is internal stakeholders of the company. I need to take care of my internal stakeholders. So the internal stakeholders can be part of your procurement team, can be part of your manufacturing team, can be part of your sales and marketing team, can be part of your R&D team. These people will have to be managed. If you are able to manage them, see, final objective is this: keeping the existing customers happy and attracting new customer. Referral market, existing customers who refer new customers, that is basically you, and some referral sources such as consultancy firm. You may try to have some agents appointed or some companies appointed. They will give me potential leads saying that these are the customers who are possible. Influencer market, entities and individuals who have the ability to influence marketing environment. Social influencers are some celebrities who would influence the purchase decision of a end customer. Recruitment markets, commercial recruitment agencies, universities and agencies having access to potential employee. In supplier market, they are saying there are 2 types of supplier. One is traditional supplier, that is sometimes back, I think maybe some 10-15 years back and all, supplier was not considered to be a key stakeholder. Now lot of organizations enter into a long-term agreement, enter into a long-term strategic alliance. They enter into a long-term agreement or a strategic alliance with your customer, with your supplier, so that whenever you are facing challenges, you can take their help, and because of your continuous order flow, the supplier will also have the benefit. An extension of this strategic agreement is something called as gain sharing arrangement, which is part of this chapter itself, and we did learn about gain sharing arrangement in one of the case study. I just touched upon that. And last is the customer market. So a 6 markets model or a relationship marketing can sometimes see, this basically tells you who are the stakeholders who need to be maintained. So you need to take care of your employees, customers, suppliers. Where from the customers can come through your influencers, customers can come through your existing set of people, and the existing employees is called as internal market, the prospective employees are called as your recruitment market. Next is managing 4 things. One is your customer relationship management, customer account profitability, customer lifetime value analysis, and customer selection, acquisition, retention and extension. Like I said, supplier relationship management. Customer relationship management is basically a tool which will capture all information relating to the customer. You would try to capture maximum possible information. If I am able to, so Bharadwaj Institute has some information about you, but if we are able to capture more and more information about you, it will help us in knowing what are the places where our strength is there, What are the places where I need to change my marketing strategy? If I get to know that our students are predominantly from only few audit firms, that's a trouble for us. Good thing as well as a bad thing, because we may continue to get students from that audit firm, but the trouble for us is if suddenly people don't come from that audit firm to us for classes, we will start struggling without students. So the strategy will the data can help you in deciding your appropriate strategy. Focus on knowing the needs of the customer and providing them with the best solution. Detailed information, I want detailed information, personal information. I want to know age of the person, whether married, unmarried, how many people are there in the family. So all this information will gradually help me in deciding my strategy. Maximum possible information, and sometimes it's not possible to get some of the information, but whatever is possible I want to capture them. Purchase history, buying preference, concerns, all this information I would like to store in the CRM. The CRM has three types. There is something called as an operative CRM, analytical CRM. There was a case study on this as part of, I think, chapter 9 or 10. Somewhere in that chapter they asked a case study on this. So there are three types of CRM: operative CRM, analytical CRM and strategic CRM. Operative CRM will capture all information. They will just keep record of all information about a customer's transaction. So whenever a customer is buying or buying something, or there is an enquiry, you will capture just the information. Analytical CRM would try to analyze this data and come out with certain insights, and based on the insights an organization may devise its strategy, which is your strategic CRM. Next is analysis of customers and their behavior. This can be done only if you have maintained this data properly. If you have maintained this data properly, you will be able to analyze based on geographical location, based on purchasing characteristic, why is the customer buying my product. Sometimes we want to know, how did the student enter Bharadwaj Institute? What was the source? Because how did they get to know? Lot of organizations try to get to this information, that how did they get to know about this place? Why do I want to know this? Because I want to know from where are the existing customers coming for us. If we get that information, it will again help us in doing the proper strategy. So analysis of customers and their behavior, you can do it based on geography, you can do it based on age, you can do it based on gender, you can do it based on whether they are married, unmarried. There are multiple places or multiple ways you can analyze the data of the customer. Once that is done, again it helps you in deciding a better strategy. I think the third part is customers account profitability. What is customers account profitability is, I want to know. So lot of you would have learnt at inter level that, or you prepare a cost sheet. In a cost sheet, what you do, you can prepare a cost sheet for every product. So you can get to know whether product 1 is profitable, product 2 is loss making, product 3 is profitable, product 4 is loss making. It is possible. Until now also 80-90% of our discussion, or whenever you solve a problem, you focus on calculating a profitability of a product. What does customer account profitability say is, you should calculate the profitability at every customer level. Now I am not saying, when I say every customer level, it may not be exactly at an individual customer. Sometimes I may club a set of customers into one category. I may club a set of customers into a category and then say that I will do my profitability computation for these category of customer. If you cannot segment your customer, then you may have to, if you have very few customers, let's assume a business has only 20 customers, you should prepare a profitability statement for every customer, which you learn in an area called a strategic analysis of operating income. That chapter we prepare something called this profitability statement for every customer. So here I will have to prepare a profitability. This is also called as customer profitability analysis, CPA. For a product, when you prepare a profitability statement, it's called direct product profitability, which you learn in that chapter. For a customer, if you prepare, it's called customer profitability analysis. For preparing this, you will have to extensively use the principles of activity based costing, which you could have learnt at inter level. We'll do separately again at final level also some basic problem on activity based costing, but an understanding of activity based costing is needed to prepare the profitability statement of the customer. Once you have prepared the profitability statement of the customer, somewhere you will have to pass all those common costs. There will be a lot of common costs which an organization incur. These common costs need to be passed on to the customer using some appropriate basis. Where is the basis going to come from? The basis is going to come from your activity based costing analysis. Once this is done, you will get to know profitable customers, non-profitable customer. You may try to engage more with your profitable customer and see is there a possibility of converting your unprofitable customer into a profitable customer. Not possible, please don't continue dealing with that customer. Calculation of profitability at customer level, it involves analysis of customer base into segments. I can prepare multiple segments if possible. For example, a business can have a segment called as, they may do it even based on geography. The segmentation can happen based on geography, the segmentation can happen based on age, the segmentation can happen based on some other characteristic whichever is possible. So you will have to first segment your customer if possible. Certain businesses will have very few customers, so they may not want to do a segmentation. If you have only 20 customers, you will try to prepare a profitability statement for every customer. Computation of annual revenue, annual cost, identification and retention of quality customer, re-engineer or eliminate your unprofitable customer. You can say no to them or you can increase the pricing with them. So either they themselves move out, and if they want to continue, they are ready to give you higher price because you want higher price from them. Activity based costing is used in CAP. This is one of the way of doing a customer classification. You can end up doing in any way. I can classify my customer into platinum category, they are the most profitable. Gold category, they are the profitable customer. Iron category, low profit but desirable. Lead category, unprofitable and undesirable. This is just one example. Your wish how you want to classify. Sometimes you will see a bank calling you that you are a platinum customer for us or you are a gold customer for us. That's their way of classification, whatever way the organization wants to do. And this could be internal classification. You can even communicate it to your customer. When you are buying a debit card or a credit card, there are multiple variants they give. They classify those variants into, maybe sometimes they'll say it's a platinum variant, it's a gold variant, because they know that there are extra profits which are possible in the platinum category, and there they also give you more services. All that happens. This is one part of the analysis. It's called customer account profitability. This is done every year. Now I am going to acquire a customer in the first year. I want to acquire a customer. So when I am trying to acquire a customer, I will give certain discounts. I will give, the first time when you acquire a customer, you may give certain offers also. Today also, if you try to buy something through Swiggy or Dunzo, you will see that they will keep giving you certain codes. These are there for the first 2 purchases or first 3 purchases because they want you to attract for the first time. Now, if I prepare a profitability for every year, high possibility that in the first year, most of the customers would be loss making. Most of the customers in the first year would be loss making because you would have incurred a significant cost even on your marketing and other things. To acquire a customer, there is a cost which needs to be paid. Then if there is a loss in the first year, why should I acquire that customer? Why would you acquire a customer if there is a loss in the first year? Long term, every year there is a possibility of earning money. So customer account profitability focuses on annual calculation. There is something called as customer lifetime value analysis. Customer lifetime value analysis, which focuses on lifetime profitability of a customer. You need to make certain assumptions. For example, let's assume you start our classes at CA foundation level. We start with a very low pricing at CA foundation and you are happy with us. We do an internal analysis saying that CA foundation, let it be loss making. 80% of foundation students would become our inter students. 20% may move up, but 80% are likely to continue with us. At inter level, we will make so much of profit, so that takes care of the loss which happens at foundation. From the inter level, we at least expect 50% to continue with that final level. So over the entire lifetime, we will make money from you, but maybe at one stage I make a loss. So lifetime value analysis basically tells that calculate the profitability for the entire lifetime of the customer. An allied concept which you learn I think in chapter 3 or 4 is called as life cycle costing, which is done for a product level. Life cycle costing, that is what you end up doing here also in customer lifetime value analysis. Present value of net profit that we derive over the entire life. ABC technique will have to be used, activity based costing. This will help in focusing more profitable customer and stop servicing non-profitable customer. High probability in the first year, you will make a loss with the customer, but you still want to continue dealing with the customer because you know that you will make money later on. The last part is customer selection, acquisition, retention and extension. This was a very small part in the theory. ICA ended up asking a 8-mark question on this in exam. So from where questions would come is impossible. This was a 8 or a 4 mark, a part of a 20-mark case study. This was a part of a 20-mark case study, but it ended up coming in exam. Now what is customer selection is, what type of customer do I want to target? Now suddenly Bharadwaj Institute may say that we are going to target customer who secure more than only 95%. If suddenly I put some restriction like that at +2, I want students who have secured more than 90% or a 95. That's my strategy, that's my wish. I want to do something like this. So what type of customers do you want to target? Develop relationship with the new customer and acquire them. In order to acquire a customer, you can use a set of offline technique, you can use a set of online technique. I can do a marketing through some of the agents marketing can be done, some referral marketing can be done. Basically, how can I acquire the customer? Now lot of online marketing is also happening. Whenever you do a Google search, you will see an ad first flashing, because lot of online marketing happens, digital marketing is also happening. How are you going to acquire your customer? After acquiring the customer, it's very critical to keep the customer happy. When you are keeping your existing customer happy, he will also bring extra customer for you. And the last part is extension. For extension, we will do something called as cross sell, upsell. There's also another term which is coming called as add-on selling. Any idea what is cross selling? Any idea what is cross selling, upselling? Any idea what is cross selling? These terms you may have come across. Upselling at least should be easy to understand. What is upselling, cross selling? Okay, what is upselling is, you went to a shop and you wanted to buy a 500 rupee product. In the same thing, the person, the employee there influences you saying that it's a good product, but I will tell you for you what works better is a product which is costing, he will not tell you the price, but he will end up forcing you to buy some other product, and that product cost will be some 1000 or 1500. I am trying to upsell the product to the customer. I have multiple variants for the product. Let's assume you wanted to buy a laptop. There's a laptop available at 40,000, 50,000, 60,000, 70,000. So when you go to the shop, I will try to upsell the product. What is cross selling is, you went to buy a laptop. So you got the laptop, now he is saying along with the laptop you can buy a printer. Printer will help you in this. You can buy an internal. So I am trying to sell some related products to you. I am trying to sell some related products to you. That's called cross selling. Now you have come for CA final classes. If I try to influence you to buy our, let's assume some of you are doing CWS, CS, if I try to influence you to get that, that is technically doing cross selling with the existing customers. Or you wanted to only take SCMPE classes, now I influence you somewhere saying that we have other subjects, why don't you take those classes also with us? So that's called as your cross selling. There's something called as add-on selling, where I want to sell something extra to you, that's all. Whether it's a related product or not a related product, I'm not. Related product selling is called cross selling of a product, and upselling is trying to sell some expensive product as compared to a product which you wanted to buy. Okay. Okay, I'll quickly just close the supply chain management part fully, so that we can end up then solving question. On the downstream supply chain we have done with almost. Next is the last two part is on information technology. IT is basically something which is from a manufacturer point of view. When we said that a manufacturer dealing with a supplier, we saw that e-procurement, e-sourcing and e-payment. Mostly similar things can happen even at a downstream side. Linking of sales system of a company with the purchase system through electronic data interchange. EDI is basically all your information relating to purchase and sale would come in the internet mode. So because of this, there would be quick action. See, what can happen is, I am a customer of a company. I have been buying continuously some product. So let's assume I am a supermarket. If the data on my sales can go to my supplier on immediate basis or to my manufacturer, he would get that information, and maybe I'll tell him that moment my stock reaches 10 or 15, you'll have to replenish and you'll have to send me some 40 units, 50 units. Some rule would be set, and based on that automatically an order will go, he will make the supply, and then payment can again happen in the online mode. Brand strategy is basically how an organization can distinguish, or how a customer can distinguish a company through the brand. So branding makes a huge difference. It can be usage of logo, specific color, or any other means by which product or service is distinguished from others. If you buy a bottle of Pepsi or a bottle of Coke, a 2-liter bottle or a 1-liter bottle, you will see that there is a label on top of that. That label technically doesn't have big utility, okay, except for certain statutory information which you need to give, but apart from that there is no major utility of that label which is there. You need a plastic bottle which is a packaging, you need that label. In technical parlance, that plastic bottle is called primary packaging, the PET bottle, and that label is called secondary packaging. That secondary packaging is done in order to attract the customer. Sometimes whatever products which cater to the kids segment, you will see this extensively being done by them. For the kids segment, they will try to create a visual appearance in such a manner that it attracts those customers, and then they end up buying it. So branding is basically trying to have a logo or a specific color, or maybe some celebrity, some cricketers photo, so all that somewhere ends up attracting my end customer. I'll talk about SLA later on. This is in the next segment. There is something called as gain sharing arrangement, so I'll discuss there. Benefits of supply chain, most of them are self-explanatory, you can just read them quickly. Most of them are self-explanatory. See, major part is on the inventory side, others are trying to standardize the process and other things, but major part is on inventory reduction, and I want to standardize my processes so that I am able to meet my customer needs in an effective manner. Inventory reduction, personnel is employee reduction, productivity improvement, order management, information visibility, better processes, customer responsiveness, you are able to respond quickly to your customers. Terms, one is your gain sharing arrangement, second there is an outsourcing which needs to be discussed, and third is a service level agreement. These three concepts we need to discuss. First let me discuss on outsourcing. Let me first discuss on outsourcing. Outsourcing is something which you have already seen. What happens in case of an outsourcing is, instead of doing a process internally, I outsource it to an external professional. The reason for doing this could be multiple, but majority of the times the reason would be cost reduction. There could be a cost reduction which will happen when you are doing outsourcing of a part of your work. Now there were a lot of qualitative factors which we had to consider when we were analyzing an outsourcing arrangement, because I need to be sure about the quality of the product, reliability of the supplier, whether you deliver the product on time, if there is any quality issue, how my customers get impacted. So outsourcing is basically, one, the financial impact part will be analyzed, but otherwise also there are some non-financial issues which can be there. So the issues with an outsourcing arrangement is, one, I lose control, or there could be a quality issue. For example, if I have to outsource, let's assume a process, my research and my inspection process needs to be outsourced to an external professional. When I outsource a process, what happens is, one, quality issues can be there. Second, I may lose control on that process because now I am dependent on an external professional. I want inspection to be completed within 2 hours of product getting manufactured. When it is within my control, it's easier to do. When it is with an external professional, there's a possibility that you may lose control on this and you will not be able to manage this properly. Also, there can be some confidentiality issues which can also come in, because if some of your processes are extremely confidential, it has some data which is extremely confidential, there's a possibility that this confidential information may go to an external person. So outsourcing is normally done to reduce cost or improve efficiency. Outsourcing is not only limited to manufacturing, even services can also be outsourced. Example is call center service. Outsourcing is an integral part of downsizing or re-engineering. Major benefit is cost saving, reduction in investments in technology, infrastructure and people, flexibility in staffing. We had done a case study where we were planning to outsource our logistics requirement. The reason for outsourcing the logistics requirement is there was seasonal demand for the product. In few months the demand is very high, in few months the demand is lesser. So we were thinking of doing an outsourcing of this. Now why do I outsource in case of a seasonal demand is I wanted some flexibility in investments in infrastructure, because reduction in investments in infrastructure. If I have to have my own logistics arrangement, I have to make huge investments which will remain idle for some amount of time. So wherever there is uncertainty in demand, wherever there is a seasonality in demand, you may go through an arrangement wherein by which what happens is you are investing lesser on your infrastructure, on people. For example, let's assume you are thinking of buying a car. Now the first thing I need to see is there a requirement of a car on a daily basis? If there's going to be an occasional requirement of a car, then there's no point in buying the car, because you end up spending so much amount of money. Then there is a regular amount of maintenance which needs to be done on that asset. Instead of that, it is preferable to go through an Ola or a Uber, because if you believe that the requirement is not that high, in case there is a daily requirement, you are going to use it on a daily basis and daily you need to use it for 20-25 kilometers, then it may make sense for you to get a car. Otherwise it doesn't make any sense, because it's better to do it through an outsourcing kind of an arrangement. The disadvantages is loss of control, losing sensitive data, which is your confidentiality issues, and quality problems. Now whenever I am doing an outsourcing, if I want to control my operations or I want control over the external professional, one arrangement which an organization would enter is into SLA, service level agreement or an arrangement. SLA would be entered into it. I'll first explain what is SLA and then you will explain the slide. Any idea what is turnaround time? This is a term which we normally use, or normally you may use it in your even in your practical during your audits also you may use this word. Any idea what is turnaround time? TAT, that's the normal term they use, the short form. What is TAT? Any idea what is a turnaround time? Okay, let's assume I have some issue with my laptop. I give it to my IT person saying that you please look into the laptop. When I give him, I'll technically ask him how much time it will take for you to repair this. That's technically called as turnaround time. What is the TAT in which you will work? Every organization will internally fix TAT for certain requirements. For example, if you give a laptop an IT service engineer, the TAT, the general TAT is within 1 hour this needs to be serviced. For example, I am applying for a PAN card. The PAN card, the income tax department may have a TAT of a day or a 2 days or a 5 days within which that needs to be allotted. So every activity which happens, there is going to be a turnaround time which is going to be fixed for that. That turnaround time is nothing but a service level arrangement. Now I don't want to be at the mercy of the external professional always, because the external professional, if is not working properly, I am going to be under trouble. So I don't want to be at the mercy of this person always. So what I will do is, in my agreement, I will enter into a service level arrangement. The service level arrangement is going to tell what is the minimum level of service expected from that external service provider, or the external manufacturer. For example, logistics arrangement, the SLA will say that 95% of the deliveries will have to happen within 1 day of picking up the product. The SLA may say 85% of the time the customer has to give a good quality rating for you. So whatever are the expectation that would be entered in the agreement. Why do I enter this into the agreement? If the SLA is not being met by the external professional or the external service provider, you may see some penalties being charged. You will see some penalties being charged, and if it is met, you may also see rewards being paid. So there can be rewards as well as penalties which can come. Rewards and penalties which can come because of SLA being met or SLA being not met. Without SLA being there, you will see lot of issues being there. Normally within the company, I have at least seen in the place where I used to work, there were SLAs for different activities which were there. Because for example, a new client comes in. For a new client coming in, we need a code creation was to be done. So I used to give this information to the IT team. IT team has to create a code and give it to us. For that also there was a turnaround time saying that this code creation will be completed within 24 hours or within 48 hours, within 72 hours. If that timeline is not there, it is difficult for me to get the work done within that specified period. This was for an internal department. For an external department, you are at more trouble. You are at more trouble because you will not have any control on this guy. So if you want some control on the external professional, you will enter into a service level agreement which can focus on quality, it can focus on delivery, it can focus on speed of work, it can focus on cost side also. So there are multiple areas where it can focus on, but the SLA will tell what is the basic minimum service I expect from that person. If he meets it, there can be rewards, or if he meets it, then only I will make the payment. If he doesn't meet it, there can be penalties. So whatever is the arrangement.to. Agreement between the customer and the service provider. Agreement can be with an external organization or within different teams of the same organization. Rewards and penalties are specifically defined in the service level agreement. SLAs can be periodically revised if needed. This will ensure that I get the work done from the external professional, else there is going to be trouble, because I want my work to happen on time, and that can happen on time only if I have a proper arrangement with the external service provider. Then the last concept in this chapter is a gain sharing arrangement. What is a gain sharing arrangement is, we had seen it earlier also. I am basically entering into an agreement with my supplier or a service provider in which for example, I am going to supply my product to Tamil Nadu government. Normally past history says that government makes payment little delayed. So what happens is, I need to supply this product to government. For this I will have to buy some product from my raw material supplier. To the vendor, I clearly indicate that you supply the product to me, I will supply to the government, but I will not make any payment to you. I will not make any payment to you unless I get the payment from the government. If the government gives me the payment, you will also receive the payment. If the government does not give me the payment, the supplier will also not get the payment. Indirectly, the supplier becomes a partner in the profits as well as the losses which are going to come out of supplying to the government. Now what will happen is, if you are normally buying a product for 100 rupees, in a gain sharing arrangement maybe you will buy it for 105 or 110. The reason for this extra payment is because you are getting the flexibility of not making the payment to your external supplier, or it can be that it may not be that the payment will be 105, but you will give a steady order. So it could be multiple reasons why the supplier will enter into this. Review and adjustment of an existing contract to provide benefits to both parties. Supplier agrees to perform service with no guarantee of payment. Gain sharing arrangement are on the face of it a win-win situation. Both the parties will gain out of it in a normal situation. we had seen that normally gain sharing arrangements would fail if the terms are not clearly defined, because if you clearly define that how the gains are going to be shared, then there is no problem. But if the arrangement is not clearly explaining that how the gains would be shared or what will happen in XYZ scenario, or if you don't have a trust factor, if there is no trust factor, then GSA would fail. We had seen this in one of the case studies in decision making chapter.